and their creditors would ultimately be protected. The FDIC is involved in trying to improve that situation, and there is a living wills requirement, as you know, for all of these big banks. But frankly, 6 years after that requirement was created, we have not made enough progress with those living wills. So, you know, if we want to talk about entry, we should be talking about fintech. We should be talking about the new ways that finance is provided in the United States. There's a lot of risk capital going into finance. Yes, it is relatively hard to get insured deposits, but that's because the FDIC has a responsibility not to impose bigger effective taxes on the rest of the banking industry. Where are we on too big to fail? And how can we possibly create a level playing field for community banks before and until we really make sure that no bank and bank holding company in the United States is too big to fail? Thank you very much.
Thank you. Mr. Williams, you're now recognized for 5 minutes.
Thank you. Chairman Chaffetz and Ranking Member Cummings, my name is Guy Williams. I'm President and CEO of Gulf Coast Bank and Trust Company in New Orleans, Louisiana. My bank was chartered in 1990 at the beginning of a recession with $1.5 million in capital. Over the last 25 years, we've grown into a $1.4 billion community bank serving Southeast Louisiana. We're the largest small business lender in our state, specializing in helping to establish and grow new businesses. And we're also one of the area's largest mortgage lenders. ABA appreciates the opportunity to testify on the dearth of new bank charters. New entrants into any industry are a sign of economic vitality. New banks provide more choices of competitive products and services for business and consumers, which translates into greater economic activity and growth in local communities. The lack of de novo banks is strong evidence that the economics of new community banks don't work. Investors have options. If the impediments to starting a new bank are too great, they will invest elsewhere. Sadly, the forces that have acted to stop new bank charters are the same ones that have led to a dramatic consolidation in the banking industry. Excessive and complex regulations that are not tailored to the risk of specific institutions. This, not economic conditions, is often the tipping point that drives small banks to merge with banks typically many times larger and as a barrier to entry for new banks. There are only 7 de novos in the last 5 years. More troubling is that there are 1,500 fewer community banks than 5 years ago, a trend that will continue until changes are made that will provide relief to America's banks. In April, the FDIC announced some welcome but small supervisory changes to help prospective de novos through the process. Unfortunately, they do not address the underlying barriers to entry: capital hurdles, unreasonable regulatory expectations on directors, funding constraints, an inflexible regulatory infrastructure, and tax-favored competition from credit unions and farm credit system. If it does not make economic sense, no one will start a new bank. Look no further than the lack of new charters for proof that something is seriously wrong. When you fix the underlying problem, new charters will result. Gulf Coast Bank started with $1.5 million of investor capital, $4.4 million in today's dollars, and proceeded to create an institution that's helped our community thrive for more than 25 years. The current requirement is it would take $20 to $30 million to start a bank. That's many multiples beyond what successful banks needed in the past. It's doubtful that a new bank today could earn enough to cover the cost of that capital. There are many banks like mine that pooled local investment dollars to start a bank and built it into a strong community partner. I doubt seriously that my bank would be granted a charter today, due to the capital requirements, the constraint on assets, the restrictions on funding. Couple these factors with a suffocating regulatory blanket, and I doubt that our investors would have made the investment. To ensure the broadest possible range of financial options to our communities, we must think creatively to find solutions that stimulate new bank entrants. The changes that FDIC has made are a good beginning, but much more can and needs to be done. It's time to think differently to encourage new banks by requiring less capital, reducing regulatory burden, permitting greater flexibility in business plans, and lifting funding restrictions. Each and every bank in this country has a direct impact on job creation, economic growth, and prosperity. Our slow recovery from the recession is partly a result of the shrinking pool of community banks. We urge Congress to act now and pass legislation to help turn the tide of community bank consolidation, create an economic environment that encourages new bank charters, and protect communities from losing a key partner supporting economic growth. Thank you. I'll be happy to answer questions.
Thank you. Thank you all. I'll now recognize myself for 5 minutes. Chairman Groenberg, on page 1 of your testimony, you say that FDIC institutions are posting record profits, and yet on page 6 you say that the profitability ratios are below pre-crisis levels, making it unattractive to start a new bank. Which one is it? If you can push the button.
Sorry. It's actually both. The industry as a whole, as we've documented over the past several years, has been gradually but steadily recovering from the financial crisis. So on most of the major metrics of performance, net income, credit quality, and loan balances, the industry has been getting better. But it's something of a tribute to the industry that they've been able to do that in an economic environment of very low, historically low interest rates and low net interest margins, so that the margins they're able to generate on their loans are narrow, but they've actually been able to compensate for it, and this is particularly true of community banks by expanding lending activity.
I just think it's inconsistent for you to suggest that there is not, that the profitability ratios are so low that it's unattractive to file an application at the same time you say that they're record profits. People do want to get into this business and service the need and the demand that's in the economy. 94% of all bank applications since 2009 have not been approved. 94%. Do you really believe that all those bank applications don't meet the needs of the communities?
Well,
I mean, are we really supposed to believe that 94% of the applications were insufficient?
if I may say, Mr. Chairman, 2009 was the second year of the financial crisis, probably the most severe financial crisis, at least since the Great Depression. In 2009, we had...
I know, but to date...
No, but I'm saying is...
How many have you approved to date since 2009?
Well, what I can say is between 2000 and 2007,
That's not what I'm asking.
No, but my point is, Mr. Chairman, if I may just respond, we've had a post-crisis environment really since 2009, which is in some measure unprecedented. We had the most severest financial crisis.
Okay, you're not answering my question.
Well, no, I'm
here.
trying to explain that we've had the longest prolonged period of near-zero interest rates in our country's history.
At the same time, you're posting record profits,
Yeah. No,
and you're not approving any applications. That's the problem.
we're not, if I may explain, we're not receiving applications. And the reason for that is
94% of the ones you did were not approved. You
Well-
only approved 3.
you have to, we've had a small number of applications, as you know, and we have an environment in which it's difficult for an institution to demonstrate a viable business plan. We've had established institutions coping with a challenging environment by generating larger volumes of loans to generate revenue.
You're not answering
Well,
the question.
I'm trying to.
I know, but
as
you're
best
not.
I can.
That's what I'm explaining
for-
to you. You may be trying, but you're not answering the fundamental question.
For new institutions to get over the hurdle, they not only have to be able to generate revenue, but they also have to get over the fixed cost of establishing the institution. And in a near-zero interest rate environment, that becomes particularly challenging.
But they're posting record profits. So you can't have it both ways. And my fundamental challenge is that you've only approved 3. And then that's highly suspicious I think there's more systemic risk because the cruel irony of all this is there are fewer institutions that have more leverage, more of the play. And so you have very large institutions out there that are trying to get into this business. You have applications that are pending for a long period of time. One application's been pending since 2008. Another application is showing pending since 2009. I mean, how long does it take to go through these applications? You and I have talked about this in my office, and I still don't understand. That's why we're having the hearing. I still don't understand why it takes so long.
Well, I think without speaking to a specific application, I think, as you know, the ones that are pending relate to industrial loan companies. There was a more than 3-year moratorium period and an additional moratorium period, I think, during the,
Is that still in place?
no, that expired in 2013.
And have you approved any since then?
And I believe the applications you're referring to have not really been pursued by the applicant since that time.
But they're still pending.
They're still pending.
What are they supposed to do? I mean, they're pending.
If the
Do
applicant...
they have to come and say, will you please continue to do your work? I mean, these institutions, they spent 7 figures putting these things together. Why aren't you, if they're still pending, why aren't you taking action on them?
The applications as they currently stand, Mr. Chairman, I don't think would meet the standards, and the institutions have not pursued them.
They have pursued them. They're pending before your body.
But they're no longer actively engaging with us on the application, I believe, Mr. Chairman.
So they submit the application, they've done everything they're supposed to do, and it's still pending, and they need to show activity?
Well,
you state that you're going to put out some guidance, right? When is that going to happen?
I think we're going to do it, I think, over the course of this year.
No. Give me it. Come on. Give me a
Certainly
date.
before the end of
How long have you been working on it?
As I indicated...
When did you start the process of coming up with the guidance?
We've already issued guidance, and as I mentioned, in 2014 and 2016.
No. You're not answering the question. I'm sorry I'm going over time here, but this is a very simple question. You put it in your opening statement.
Yeah.
Okay? When will you actually complete this exercise? When did you start it? And when are you going to publish it?
I believe we began it earlier this year, and I believe we'll publish it before the end of the year, Mr. Chairman. And if you like, I'll come back to you with a specific time frame for doing that.
That would be great. I've gone past my time. Let me now recognize the gentleman from Maryland, Mr. Cummings.
Let's start. Let me get this clear. Mr. Brownlee, what do you think? Why do you think people are holding up your application? Let me get down to the nitty-gritty. Because apparently, I mean, you got...
I don't think it's necessarily his.
Oh, well, he's here testifying. He's upset, are you not?
I am.
What do you think is the motive? Why would they deny your application? I mean, you think they just don't like you? I'm serious. I mean, what is it? And I'm not trying to be smart. I'm just trying to figure out, I'm trying to get to the bottom of this.
No, I don't think it's personal.
And what do you think it is? You think it's competition? They're trying to protect competition?
I believe the FDIC has yet to come out of crisis mode. I believe it's acting much more as an insurance company and less as a regulator governing safe and sound institutions. I think it is some lingering shell shock from the crisis, and it is loath to accommodate new banks, which historically new banks are a bit riskier, but in terms of true risk to the deposit insurance fund, it's de minimis, and in terms of risk to the system, it's de minimis. And in my example, we came forward with $30 million in capital. Our business plan showed profitability at the end of year 1, and we were effectively stonewalled for an extended period of time.
So you think they're being too careful, basically. Is that what you're saying?
Yes, sir.
All right. Mr. Chairman, how did the insurance fund fare during the financial crisis? I can't hear you.
As you know, Congressman, over 500 institutions failed since 2008. The Deposit Insurance Fund was actually depleted during the course of the crisis and as a result of the failures. At the low point, the Deposit Insurance Fund was actually $20 billion in the red, and we were placed in the position of having first to impose a special assessment on the industry to bring in liquidity, to manage all of the bank failures, and then had to impose a prepaid assessment on the industry to bring in further liquidity to manage the failures and support the fund. Since the crisis, we've been able to rebuild the fund. And
okay, I got it. I don't have a limited time. I just wanted to get that. You told me what happened. The number of new bank charters is significantly lower in the years since the financial crisis than in the years before the crisis. Professor Johnson, what do you believe accounts for the decline in the number of new bank charters?
The primary explanation, Congressman, is the low interest rates. And I think the reconciliation of the points Mr. Chavez was making earlier is, for existing banks, if you have existing loans at relatively fixed rates, yes, there's some return to profitability. But if you're a de novo bank, that doesn't inherit these loans, that actually holds a lot more in federal funds, for example. This is all in the Fed paper that Mr. Brown was trying to cite. It's all there. It's all clearly documented. The profitability for a de novo on a forward-looking prospective basis as being valued by the FDIC is very low. In fact, it's lower than it's ever been in recorded data.
In an article published on June 24, 2016 by the American Bankers Association, the ABA's chief economist James Chesson wrote, and I quote, "Great investment options don't exist in today's abnormally low-rate environment," end of quote. Mr. Williams reiterated that today in his written testimony. Professor Johnson, do you agree with the concerns expressed by Mr. Williams and the American Bankers Association's chief economist?
Yeah, I think Mr. Chesson's article was spot on in that regard. Low interest rate environment, very hard for investors to make money. And if you're the insurance company, remember the FDIC is not chartering any banks at all, none. The FDIC agrees to provide you with deposit insurance or not. So from an insurance company perspective, evaluating the risks, if they can't make any money, if they're not going to be profitable because of this low interest rate environment, that's substantially higher risk, and you should therefore, on a prudent basis, be less willing to provide them with insurance.
Mr. Williams also stated in his written testimony that he started his bank in 1990, quote, in the middle of a so-called S&L crisis and the beginning of a recession. Despite these severe conditions, there were 193 de novos that year, end of quote. He compares that with the current business cycle. Professor Johnson, are there differences between that business cycle and this one, and how do interest rates compare?
There are huge differences, Congressman. Mr. Williams' achievement is impressive, let me be clear, but there was a very different interest rate environment. Interest rates did not fall anywhere near the level that they are today, or they've been since the financial crisis. For the past 8 years almost, we've had extremely low interest rates. There's a very, very different world than anything we have ever seen in the United States.
The American Bankers Association chief economist also wrote this quote, "Sure, de novos are risky. They failed at twice the rate of other banks historically. They create losses for the FDIC," end of quote. Professor Johnson, is Mr. Chesson right? Is that correct?
Yes, I think Mr. Chesson is actually citing the same Federal Reserve research that I was talking about. That's what they've documented very clearly in the data, a failure rate of de novo banks 2 times established banks. And as Mr. Grunberg already said, there's a lot of failure between years 3 and 7 in that, which is why they heightened or extended the de novo scrutiny period in 2009.
What trends were observed regarding the failure rates of new banks during the crisis? Were adequate safeguards in place prior to the financial crisis to ensure that risky new banks were not approved?
Well, the FDIC has looked at this carefully, and I cite the research in my paper. I think it's good research. They found a lot of de novos failed, including in this recent episode. Now, the FDIC is not charged with making sure that 0 banks fail. It's an insurance company, so some failure is acceptable as long as it's covered by the premium. And then the key issue is, over the cycle, what happens to the deposit fund? That's a really tangible, hard to argue with measure of how this insurance company did. And as Mr. Grunberg said, they were negative $20 billion. So they were on the side slightly of allowing too many banks with not very good prospects over the business cycle to enter. I think looking back and seeing how they managed to build it up, it's hard to complain too much. I don't think the FDIC did a bad job on financial regulation, but there's no way that they were shutting out the banks or preventing them from entering, and I don't think that's the business they're in today.
My last question, Professor Johnson, if the FDIC were to weaken its regulations in an effort to jumpstart applications, would that help or harm the insurance fund?
It would create greater risk for the insurance fund, and over the cycle you'd have bigger losses. Those losses would be covered by larger assessments, both on a income statement basis, on a cash basis, from the industry. The taxpayer is exposed to some risk. Deposit funds have failed in other situations in other countries at other moments in U.S. history. I don't think the FDIC would fail. I think it's the bankers and the banking industry that would ultimately pay, and I don't think that's what the industry wants. I don't think that's what the economy needs.
Thank you.
Now recognize the gentleman from Ohio, Mr. Jordan, for 5 minutes.
Mr. Johnson, so what's going to happen when we go to negative interest rates? We're not going to have anyone apply, anyone be approved. Is that right? The argument is if the Fed keeping low interest rates, we're not getting any more banks. What happens when we go negative, which my understanding is some European countries have already done that.
Well, it's a fascinating hypothetical, Mr. Jordan. Certainly,
I don't know if it's all that fascinating. It seems like it's pretty realistic right now based on what I'm reading.
It certainly has happened in Europe. I don't think that's imminent development in the United States. But yes, to your point, if interest rates are negative, that is going to squeeze the net interest margin further.
Hurts competition, hurts the consumer, right?
Well, in terms of net interest margin, it's certainly going to be difficult for de novo community
Well, all
banks.
I'm hearing about is community banks consolidating, and you're telling me no new ones are going to be created because the FDIC is not going to give them insurance because the rates are so low and the chances of them making a profit so low. Then if we go negative, it's going to be even worse, further hurting competition, therefore hurting the consumer. All because the Fed
Well, look, if we want to talk about the consumer, we should be talking more broadly about all of finance and entry into the financial sector, including the impact of fintech, which, as you know, is substantial and growing. So that conversation about the consumer is not only about community banks, but to the extent we're focused on de novo community banks, it's certainly not going to be helpful to the issue that the chairman has put before us today.
Exactly. Let me switch gears. I wasn't planning on asking that, but you got me thinking. Mr. Grunberg, you ever hear of Operation Choke Point?
Yes, Congressman.
You ever, at FDIC, ever have any interaction with the folks over at Justice Department regarding Operation Choke Point?
As you know, Congressman, our Inspector General did a review of that, and the finding of the Inspector General's report was that the FDIC played an inconsequential role in
That's not what I asked. Did you have interaction with the Justice Department regarding Operation Choke Point?
I think the IG report found that there was some legal staff level.
So some of your lawyers talked to some lawyers at Justice about Operation Choke Point?
No, I think it was about specific institutions that the Justice Department had questions on.
You send out financial institution letters, right?
Yes, sir.
Is there like a formal letter that goes out to banking institutions? Am I getting this right? All right.
Yes.
And it's viewed as formal guidance documents, right? The banks take these things seriously?
I think that's fair to say.
All right, and you said your outreach with Justice Department and your working with Justice Department Operation Choke Point was rather limited, even though your lawyers talked to them about it. But I look at this letter that you sent back in January of 2012, managing risk and third-party payment processor relationships. You remember this letter?
I don't know specifically what you're referring to, but
Page 8 of this letter, you talk about high-risk activity, and you give a list. Ammunition sales, firearms sales, payday loans, travel clubs, to name a few. You remember this letter?
yes, sir.
Yeah, first time I've seen the list. The list looks very familiar to the same kind of institutions the Justice Department targeted in Operation Choke Point. Would you agree with that statement, Mr. Grunberg?
I really can't speak to what the Justice Department program was since we were not a participant in it. What I can say is that back in 2011, there was a article published in a Supervisory Insights journal that the FDIC produces on managing third-party risks.
Well, it sure looks very similar to me what Operation Choke Point was doing, going after the same kinds of businesses and telling banks, hey, you want to steer clear of these. I've talked to folks who say, you know what, the folks we were doing business with, our bank, said, we got this notice, and our bank said, we no longer want to do business with you, even though you're in a legitimate business selling firearms or a legitimate business providing payday lending. We're no longer going to do business with you because you're now viewed as high risk, and we're getting all kinds of pressure, and even though we may have done business with you 20, 25 years.
And all I can say is that our Inspector General did look at that issue, and they found...
And all I can say is here's the list, and the list looks very familiar.
Yeah, I understand, and because of the...
And then we have this, and so I guess here's, and I got just a few seconds, but we just heard from the chairman, you're not approving anybody. We got the interest rate issue as the reason you're citing, but the fact is you're not approving anybody, and it's different than it's historically been. Then we see this list of folks I'll tell you what this looks like, Mr. Chairman. I mean, it looks, because we've dealt with this issue a lot in this committee, it looks exactly like what the Internal Revenue Service did. They said to folks who were applying for a tax-exempt status, nope, we're going to harass you. You got to fill out a bunch for you. We're going to keep asking a bunch of questions. We're not going to approve you. And they targeted them just like this list seems to be targeting certain types of businesses that you don't like, and obviously the Justice Department didn't like, as evidenced by Operation Choke Point. That's what it looks like.
Candidly, Congressman, I don't believe that was the case, and I think the IG...
But do you see the similarities?
Sir, I can't speak to that. All I can say,
Well, I can, and I do.
our Inspector General reviewed this particular issue and didn't find any support for that, I believe.
Mr. Chairman, I yield back.
Thank the gentleman. We now recognize the gentlewoman from New Jersey, Ms. Watson Coleman, for 5 minutes.
Thank you, Mr. Chairman. Chairman Grinberg, is that correct?
Yes,
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 thank you.
Madam.
I want to follow up on a question that the chairman asked. There are a couple of applications you said that are pending for de novo banks, but you said that there's been no action on them. So are they considered dead file? Because pending suggests to me that something is happening with those applications or with whatever is before you.
No, there are a couple of active applications by parties interested in establishing de novo banks that are under active consideration. I think the chairman was referring to applications that were actually filed several years ago prior to the crisis.
Right, and so those applications, are they pending or are they dead?
Yeah, they're technically still pending, but they're not active because the applicants really haven't been pursuing them since the crisis.
Well, pending suggests to me that something, that they're,
Yeah, no, I think,
pending suggests that there's something that is expected of them or is expected of you to tell them what they need to do in order to move through the process. And so that's confusing to me.
no, I think you raise a fair point, and as I indicated, we're going to undertaking a review of our application process and procedures, and I think we need to resolve that issue so that an application shouldn't be outstanding for that period.
Right, it shouldn't be pending and be dead at the same time, right. According to reports issued by the FDIC in 2013, nearly 8% of households in the United States were, quote, unbanked, meaning that they did not have bank accounts. 1 in 5 households was, quote, underbanked, meaning that the household had at least one bank account, but also used alternative financial services, with the most common sources for alternative services being grocery, liquor, convenience, or drugstores, or even, I guess, check cashing stores. Dr. Johnson, what challenges do consumers face in obtaining basic banking services from these institutions, these alternative institutions?
Well, Congresswoman, as you know, these alternative financial institutions charge very high rates of interest. The terms and conditions they provide are not always fully transparent. There are many instances of, frankly, predatory behavior in that industry. And partly I think it's about the consumers not understanding what they're getting into, not realizing how expensive this is. But as Mr. Cummings already said, there's also an issue of how readily available are reasonable affordable financial services in that community, and then that's clearly a big problem.
Thank you, Dr. Johnson. Mr. Grunberg, FDIC, you indicated you're committed to increasing participation of unbanked and underbanked households in the financial mainstream. What does that mean? What are you doing? What do you propose to do? And what is the time frame for doing those things?
As you indicated, Congresswoman, that's a significant issue in our financial system. The FDIC, actually partnered with the Census Bureau on the first survey ever done on who's unbanked and underbanked, and we've been focusing on trying to respond to this issue over the last several years. Among a number of things we've done, we've developed so-called model transaction accounts, which are low-cost, account-based debit card accounts with no overdraft fees as a condition of the account. And as a result of our work, a number of major financial institutions across the country are now offering these low-cost threshold accounts that really reduce the barriers to entry and expand the ability of people to get into the banking system. And we think that's actually a very, very important objective to pursue.
Thank you. In a lot of communities, the impact of the Great Recession is still very profound, and many individuals are continuing to suffer from entrances and exits from the banking system. Mr. Williams, what steps has your bank taken to reduce the number of unbanked and underbanked in Louisiana?
Our bank is a blue collar as opposed to a blue blood bank. We operate in a number of parishes from Baton Rouge down to St. Bernard, and we provide free checking. So it doesn't get better than that. We advertise it, promote it. We also provide debit cards and payment cards that you can use. But the essential service that we provide is free checking.
Thank you very much. Thank you, Mr. Chairman. I yield back.
Thank you. Now I recognize the gentleman from Michigan, Mr. Wahlberg, for 5 minutes.
Thank you, Mr. Chairman, and thanks to the panel for being here. Reading information preparation for this hearing and seeing the fact that we have the lowest number of banks in the United States since records being kept in 1934 is a concern. I mean, the reason why this country, as I recollect, is the greatest country in the world based upon only a short period of time of being alive as a country, 240 years, because we had the ability to take risk and develop reward, to get capital into the marketplace, into the hands of people who can generate opportunity for people. So to hear concerns fostered in the last 8 years about trying to protect us against what has really made us great and oversee in such a way that we hold back the genius of what compounded interest, capital, being freely and relatively easy to gain if you have the process in place that says, will you take that risk on me, is a concern. Mr. Browning, your testimony says that constantly evolving and ambiguous requirements at the FDIC are putting up roadblocks to new entrants. Could you expand and describe the situation in a little more detail?
Certainly, Congressman, thank you. As we engaged in our process, we put forward a plan with great detail on our loan programs, tapping into an existing client base. We brought $30 million in capital, showed profitability in our first year. We had an exceptionally stable, low-cost deposit base built into the program and a variety of other things. There were vague suggestions that our deposit program was inadequate, even though we had ready available deposits well in excess of 4 to 5 times what the bank would need in its first 3 years of life. There were additional suggestions of entering new lines of business, such as SBA lending. And SBA lending is a great program for sure, but is not something we contemplated. It was outside our expertise. We didn't have the infrastructure staff to originate such loans, to service them, to sell them.
And yet you're not a novice in the field.
Not at all, sir. And so it was expanding infrastructure, expanding processes in ways that were outside of our core plan, outside of our profile, and to us introduced increased risk and increased cost, and were certainly not part of the statutory requirements of chartering a new bank.
Which is not the reason why you're getting into that line of work. You need to develop the risk as you determine is best to meet your agenda, which is, I would assume, to succeed, and succeed for the people that use your resources. Mr. Williams, in your written testimony, you mentioned that regulations are more detrimental to a bank's profitability than low interest rates. Why is that?
Regulations cost time and money and hurt both the bank and the consumer when they're overburdensome. And a good example is the new TRID regulation. We're one of the largest mortgage lenders in Southeast Louisiana. When TRID came in, all of the service providers raised their cost, because under TRID, if there's a change in cost, you have to redisclose and it resets a time period. So every cost went up. When TRID went in, the closings were delayed. And when TRID went in, the realtors, in particular, we have some markets in New Orleans right now, Uptown and the Marigny, where they're very active markets. Realtors would say to consumers, if you don't have your financing either all cash or locked in, we're going to tell the seller not to take your offer because the TRID delays are just too cumbersome. So it's a triple play. The consumer now has a slower closing, pays more, and has less ability to shop. But when CFPB harms the consumer like that, there's nowhere to go because there is no oversight of CFPB. So that's a regulation that costs us money, costs the consumer money, and hurts everybody.
And takes the natural rhythm that would be in place in those type of dealings and puts it on its ear, doesn't it?
It does. And I mean, it's counterproductive. It doesn't help the consumer. It doesn't help the bank. And it's unfortunate, but that's an example of an overburdensome regulation that's unhelpful.
And you truly believe that if all of this was in place when you started back in 1990, that you probably wouldn't have started up the bank?
Well, I was a little scared listening to Mr. Browning talk about spending so much money to apply. We put up all the money we had, which was $1.5 million. We couldn't have afforded all the consultants that were necessary, and it just wouldn't be possible. And I think of what would be missed. You know, there's a charter school in New Orleans that has students that are all inner city, but yet all 400 students graduate and go to college. When that charter school started, they went around the city looking for a line of credit. We were the only bank that would provide it. They think that they wouldn't be open absent our bank. I'm an honorary member of the Warren Easton Hall of Fame because of that. Well, how do you measure the things that don't occur when you don't charter banks? We're missing an awful lot of success because we want to prevent a small potential of failure.
Thanks for your service. I yield back.
Thank you, gentlemen. Now recognize the gentlewoman from Michigan, Ms. Lawrence, for 5 minutes.
Thank you, Mr. Chairman. I understand that part of the application process, there's numerous conversations typically occur between the applicant and the FDIC before a formal application is filed. Chairman Gruenberg, what types of conversations occur?
We actually encourage what are called pre-filing meetings with interested groups looking to establish a new institution, to walk them through the application and the requirements, to answer questions and to give them a sense of what's involved in the undertaking. And actually may engage in multiple meetings as the group tries to inform itself about the requirements and what would be expected.
Is this before, is this an interest in application, or there's an official application filed, and then you start having these conversations?
Actually, both. Oftentimes, when we encourage groups before they actually submit the application to come in and have what we call a pre-filing meeting so that we can establish up front what the requirements are and sort of walk them through the process. And then once the application is actually submitted, we'll then follow up with them in terms of trying to fulfill all of the requirements.
Mr. Browning, you have had some concerns. Would you say this has been your reality?
I certainly appreciate the intent of the chairman and believe that to be very genuine, but I think the reality is quite different. We went through many months of conversations with regional staff, and that went well, regional FDIC and state regulatory staff.
Okay.
Once we engaged in our pre-filing meeting, that formal presentation the chairman referenced, things turned very differently from there forward. The process was taken from San Francisco, the regional office that had jurisdiction, taken back to Washington, and that's when very unusual questions, very novel criteria and suggestions began to be made.
So if I could try to interpret your comments, there were conversations, but you felt that they were not productive and the type. Mr. Chairman, you've heard that comment. Do additional discussions occur between the applicant and the FDIC after the application is filed? And where do you think the breakdown, if at least for Mr. Browning?
Yeah, I can't speak.
You need to turn on your mic.
Sorry, I can't speak to the specific case of Mr. Browning. I do think the application process is generally a very hands-on process with applicants, and we do go to great lengths to work with applicants. I can tell you that in terms of the general experience from 2000 through today, applications are generally processed and decided on in a 4 to 6 month period. That's the overall experience. Obviously, there are going to be instances where that may not be the case. That may be the instance with Mr. Browning, but I couldn't speak to that specific circumstance.
Mr. Chairman, can you tell me what have you done? What can you state that you've done to welcome new applicants?
We are very much focused on this, and we've done a number of things, as I indicated in my testimony. We've brought together, in any application process, it's not just the FDIC, but the chartering agency, whether the state or federal agency has to participate, so we've brought the other chartering agencies together with us to work through the application process. We are going to be holding outreach meetings in regions across the country where we're going to meet with interested parties in the industry to talk about the application process and how we can work with them if they're interested in applying. We're developing a manual which will really provide specific guidance on how to go through the application process. So, we are prepared to do everything we can to lower the process and procedure hurdle of getting through the application. But
Chairman, I just want to say on the record, I would like to hear this from you. Do you identify that there has been a high rate of denials of new applications and that you are implementing new practices, or are you stating that the history of the applicants not being approved had nothing to do with your process?
I think what we're seeing in the period before the financial crisis, 2000 to 2007, where there were over 1,000.
Yes, I understand.
There was a 75% approval rate.
Okay.
So there's a high level of approval. It's really this post-crisis environment in which both there was a severe economic downturn and a historically long period of almost zero interest rates that is really...
So are you doing new innovative things to recognizing that has happened?
We can't change the economics in terms of what interest rates are. We are trying to do everything we can within our own process to make it as responsive as we can to applicants and to at least lower the barrier of the application process itself.
Mr. Chairman, I yield back.
Thank the gentlelady. We'll now recognize the gentleman from North Carolina, Mr. Meadows, for 5 minutes.
Thank you, Mr. Chairman. Mr. Gruenberg, how would you rate the FDIC on a scale of 1 to 10, with 10 being the highest, as a user-friendly organization as it relates to the application process?
It's probably not for me to judge. I would like to think...
Well, I'll judge it if you don't, so go ahead and give me a number.
I think we do a pretty good job between 5, 7, 8, but I think we can do better, and I think that's
Okay, let
be a
me
priority.
tell you the reason why I asked that, Mr. Gruenberg, because there is a belief that you have a retaliatory environment in the FDIC. And I'm here to tell you that the reason why I'm not going to give you real examples by banks is because they're afraid that you will come after them. And I'm here to tell you that I'm not going to allow that to happen. So let me give you some real examples. Since you're talking hypothetically, let me give you some real examples. You've heard from Mr. Browning and Mr. Williams. Is there any reason why you would only have a 4% approval rating in an environment that's encouraging new banks, other than low interest rates? Because you're looking at a business model, and I'm as a business guy, and actually, Mr. Johnson actually was in North Carolina. I knew Mr. Fuqua, of which the school of where he practiced, I knew him personally. And so here's what I'm saying is this retaliatory environment is very concerning. So how do you respond to that? Do you retaliate or do you not?
I do not believe we do, Congress.
Okay, well, I'm aware of some communications from your FDIC personnel from here in D.C. that says we're going to teach them a lesson, we're going to go after them, we're going to make them sweat. Would you like copies of those emails? Because let me tell you where I have, from a regulations and a regulatory standpoint, that is inexcusable. Wouldn't you agree with that?
I would.
All right. So if that happened and you're going after people, what are the consequences for those that have that kind of environment and have been sending out those kinds of emails? Will you fire them?
Congressman, I'd be reluctant to speak in the general on something like that. You'd have to look at the specific situation and the facts.
But if they've retaliated against somebody, will you get rid of them?
Congressman, I would want to be very careful to look at the facts of a particular situation.
All right. Well, I'm going to give you the facts, because let me tell you what I've got concerns about. Is I've got regulators that come in And what they do is they say, well, we need to make more loans to people that are underserved. And you tell that same bank, well, you need to watch your aging process because it's going 30, 90 days. And when the banker tells your regulators that those are two conflicting issues, you know what your regulator said? True statement. You're the banker, you figure it out. Now, that is deplorable. Wouldn't you agree?
The way you describe it, sir, I'm not taking.
Okay, I'm going to give you the benefit of the doubt to believe that somewhere in your organization, these kinds of things are just not rising to your level. But here's where I'm going to tell you. I'm going to work with the chairman to make sure that you understand that we're not going to tolerate this kind of chilling effect on this industry. Because what it does is it affects it doesn't affect the high-income folks. It affects the places that Mr. Williams serves. It affects Baltimore. It affects many of the places that, quite frankly, they need banks. And Mr. Johnson's talking about too big to fail. Well, this whole process will create where we only have a few big banks because you're not going to approve the community banks. Do you agree with that?
Congressman, candidly, we had a process that's the same set of standards from 2000 to 2007, in which large numbers and percentages of applications were.
I'm talking about after that,
Yeah,
Mr. Gruenberg. You keep going back. The
well,
pendulum was you approved 75%. Now you've come in to approve 4%. Somewhere in the middle is where we need to be.
Well,
Will you agree?
Very much so, Congressman.
So when is the pendulum going to
Well,
swing back and you're going to start to approve some of these things?
all I can say, Congressman, is the institutions and we have to function in the economic environment in which we live, and right now that's a pretty challenging one to stay.
Well, here's what I want, as this hearing, I want whistleblowers in the industry to let us know, and we're going to give them the same protection because we're not going to give you the names of those, and when we get the emails, do I have your commitment that heads are going to roll if they continue this kind of process?
What I can say, if you get emails reporting incidents, we'll be glad to look into them.
All right, I've got one in terms of some lawsuits that you got going on right now on Discovery, and I found some stuff that's not even from my state. Are you willing to look into that as well? Because you're going after it in a real draconian way to try to prove something that, quite frankly, doesn't serve the American people and it doesn't serve the banking institute. Do I have your commitment to look into that?
Certainly take a look at it.
Will you back?
Gentleman yield.
I'll yield.
Yeah, I just want us to be most effective and efficient. You just made some statements about, and I'm sure you have the evidence to prove it. I know, and I'm not knocking you. I'm just trying to make sure we get to the bottom that there's some kind of retaliation and there may be some whistleblowers. And I just want to know, what is your plan to get the information to the chairman so we can effectively deal with these issues? Well, may I just want to finish. Because all of us take a very strict position with regard to whistleblowers. We want to protect them. And at the same time, we want to accomplish what you want to accomplish, that is to address whatever that issue is that they may be rightfully so complaining of. I just want to know what your plan was. That's all.
Well, and I thank the ranking member, and you have my commitment. I'll clear my calendar this afternoon, tomorrow. I'll stay in August if you want to address this, but here's what we need to do, is we need to take these real examples, and we can just take a random sample of all the ones that have been denied or inaction. And there's the problem is, it's not even that there's action, it's just that they're out there in this holding pattern with you not making a decision and not making decisions on behalf of it. I'm willing to work with the ranking member in a real transparent way to address this problem.
Thank you, gentlemen. Thank you, Mr. Chairman.
Thank you. I now recognize the gentleman from Missouri, Mr. Clay, for 5 minutes.
Thank you, Mr. Chairman. Let me thank the witnesses for being here. The FDIC is not subject to annual congressional appropriations process. Instead, the FDIC receives its funding from, quote, premiums that banks and thrift institutions pay for deposit insurance coverage, and from earnings on investments in U.S. Treasury securities. Some of my Republican colleagues have proposed legislation that would subject all financial regulators to congressional appropriations, including the FDIC. Professor Johnson, what risk to the financial system do you foresee if the FDIC were to be placed at the whim of congressional appropriations?
Well, Mr. Clay, this is a very serious issue indeed. The FDIC, since it was created in the 1930s, has been the gold standard for independent regulation, not just in the United States, but around the world. So you have 80 years of success. And of course, there's a lot of pressures on all kinds of regulators, including through various kinds of revolving doors and other mechanisms that we've seen operate all too well. Right. The FDIC has stood up under that pressure over decades, and I'm afraid we can't say the same for other banking regulators. So I think it would be extremely unwise to change the funding basis of the FDIC and to bring it closer to Congress. We've had some very unfortunate experiences with regulators that are funded through the annual appropriation process, and I think it would be extremely bad for the banking industry as well as for the economy if the FDIC were to be moved in that direction.
So if all financial regulators were subject to the appropriations process, like, for instance, the CFPB, what kind of results do you think we would get from that?
Well, I think you would get much less effective regulation. I think it's much harder to have predictable regulatory environment when the funding is uncertain. And as various kinds of activities increase, this has been a big issue, for example, around derivatives transactions, for example. We didn't increase the amount of scrutiny of that, in part because of the constraints of the appropriation process, and you can get very large industries developing with almost no regulatory scrutiny, and of course that hurt us very badly in 2008.
Certainly did. And Chairman Grunberg, how are the FDIC's annual expenditures approved?
By our board.
By your board, and how does the FDIC ensure it does not overspend in its activities?
We have a pretty rigorous budget process that's overseen by our board, which is made up of 5 members, and as you know, politically diverse as well. It's acted on in a board meeting, a public board meeting, and all of the budget, of course, is a matter of public record. And actually, since the crisis, we've been reducing our annual budget as we've been winding down from the build-up to respond to the crisis.
And isn't it true that even without being subject to the appropriations process, Congress still maintains meaningful oversight of the FDIC's operations? Is that correct?
I would say that's fair to say, Congressman.
Kind of like this hearing today, and we're in the oversight committees, and so which I find it interesting, because you usually come before the Financial Services Committee, and for whatever reason you have shown up here today, but I appreciate that, Mr. Chair, and I will yield back the balance of my time.
I thank the gentleman from Missouri. The chair recognizes the gentleman from Georgia, Mr. Heiss, for 5 minutes.
Thank you, Mr. Chairman. Mr. Grunberg, let me ask you your opinion and that overall of the FDIC. Should banks be national, or is there a need for local community banks?
Oh, I think community banks play a critical function in our financial system and economy, Congressman.
I do too, and yet they're closing all over the place, and they're not being approved all over the place. Do you believe that there are too many banks in this country?
Certainly not too many community banks, and we could use more community banks.
What about banks as a whole?
No, we have a strong banking system in the United States.
Are there too many?
No, I don't think so.
Does the FDIC in any way have a strategy, a plan, a policy for consolidation in the banking sector?
No, sir.
And yet banks are being swallowed up by bigger banks.
You know, there's been a...
Are you saying that's all coincidental?
There's been a 30-year process in the United States of gradual consolidation within the banking industry, both at the large institutions as well as at the community bank.
Does the FDIC have any role in that, either through policies or in any way would you think FDIC is responsible or has a role in that consolidation?
I think deposit insurance is something that's viewed as actually supportive and beneficial for community banks. And going back to 1933, when the FDIC was created, the strongest advocates for deposit insurance were by community banks to put them in a stronger position to compete with the larger institutions.
Do you believe that competition in the market is important?
Critical, yes, sir.
Should consumers have options when it comes to banks?
Yes.
They're getting fewer and fewer options. We're all certainly watching that. Let me, for a quick moment, Mr. Browning, let me go to you. Your written testimony estimates that it would cost nearly $1 million for the application process. How much would this have cost, do you think, had you gone the entire way through the process?
Congressman, I think that is an unanswerable question, unfortunately. We went through a very protracted process, spending a great deal of time and money. As I mentioned, we spent nearly $1 million. We had $30 million in capital to put into the bank, showing a plan that was profitable in year one. But we came to a conclusion that we could not actually achieve the end of the process. If we saw a light at the end of the tunnel, we stood ready to make reasonable changes, but we felt like we were shadowboxing and could not get clarity on what was actually required and did not want to pour good money after bad.
So your experience is that the cost involved certainly affected not only you, but other interested candidates out there would struggle over the cost of the process.
Certainly the cost of the process, but perhaps more importantly, the ambiguity and indeterminate process. There wasn't a
no light at the end of the tunnel, as you described. Your written testimony also mentions that the FDIC felt like there was no community need for your bank. Do you have any idea what the definition is of a community need?
Well, I certainly know the historical application of that, and it's spelled out in the statutory requirements within the Federal Deposit Insurance Act. And for our application, our community were clients, retail clients, coast to coast, that needed basic banking services in conjunction with their brokerage accounts. This was a built-in customer base, and these are just mom-and-pop retail investors. That was our community. The new interpretations or new suggestions were unknown to us.
Did the FDIC explain to you what their interpretation of community need was?
No, they did not give an explicit interpretation of what it was, but they suggested what it was not. They suggested that our existing customer base was not adequate, that serving consumer demand for banking services that we had a personal relationship with was not a sufficient justification to charter a bank.
Who's best to make that determination, the FDIC or those in the local community, as to what the community need is for a bank?
I think those in the local community, and I would also look at some of the regional offices of FDIC who have experienced expert staff on the ground in the local real economies, that they have a very good grasp, where I think it's much more difficult to regulate strictly from Washington. But certainly local business people enmeshed in the community are certainly the best testament to what those community needs are.
Thank you, Mr. Chairman. I yield back.
I thank the gentleman. The chair recognizes the gentlewoman from the Virgin Islands, Ms. Plaskett.
Thank you, Mr. Chairman, and thank you, gentlemen, for being here this morning. I wanted to ask about several policies related to keeping the financial system safe. Professor Johnson, in 2011, you published an article in the New York Times leading up to the financial crisis. Some bankers, and I quote, you wrote, understood to a large degree what they and their companies were doing, and they kept it up until the last minute, and in some cases beyond, because of the incentives they might receive. Could you explain what you meant by this?
I don't recall that precise article. I have written on that topic many, many times. The general point is that when you provide incentives with some sort of downside protection, So too big to fail would be the most notable version of this. But also it comes up, by the way, in a lot of the conservative commentary about deposit insurance over long periods of time. If you're protecting people from downside risk and on the upside, they do very well, then they are naturally, just as a matter of arithmetic applied to incentives, they're naturally going to take more risk. Now, sometimes you might feel that you can contain that. That has been the experience with deposit insurance in the US for 80 years. But unfortunately, with regard to larger financial institutions, and some of the largest in the run-up to 2008, the risks that they took were so big that they ended up having a devastating effect on the real economy. That's why we had this massive recession.
So those risks that they took at the largest financial institutions that you're speaking about, and the bank executives of those institutions, are they still incentivized in the same manner that they were at that time? And what is their incentives today to act in the best interests of the nation?
I'm afraid that at the largest, what are now bank holding companies, they still have an enormous amount of effective downside protection provided by the federal authorities, both the Federal Reserve and other parts of the U.S. government. And we have not ended the problems associated with these too big to fail financial institutions. So that's a distortion of their incentives. And the chairman, Chairman Chavez, who opened the hearing, argued that systemic risk is going up. I think he's right, but for a different reason, which is it's the effects of these very large financial institutions and their distorted incentives. Systemic risk is hardly affected at all by the margin of de novo community banks. That's just a matter, again, of arithmetic. They are very small relative to GDP. The large financial institutions are huge. The largest single bank in the country, JP Morgan Chase, has a systemic footprint, which the Fed calculates to be about 40% of US GDP, 40%. So that dwarfs anything that we've been discussing so far this morning.
So there's systemic issues that you're discussing and the risk that banks are willing to take, and particularly the bank executives in making those risks. Do you believe that the FDIC should look at compensation and the compensation models that these banks have in their application process to determine what potential risk that the bank and its executives might make in their decision-making because of the compensation that they receive based upon those risks?
Yeah, it's certainly how you compensate your executives is a very important part of the risk profile that your bank or any firm adopts. And as I read the FDIC criteria, which frankly I find to be pretty transparent, well explained, and I like the Q&As as well, as I read them, that is one of the criteria. There's other criteria as specified by Congress. But yes, from a point of view of deposit, just the narrow deposit insurance, I think the FDIC does take that into account. Of course, the FDIC also has additional responsibilities created by Dodd-Frank with regard to some of the largest financial institutions, including with regard to living wills, and that may also be a consideration there, although frankly there's less transparency on that process.
As a lawyer, I guess the living will piece sounds really interesting to me. But Chairman Grunberg, could you explain to me how the compensation models might play and how you evaluate that in determining the applications of banks in terms of, would the compensation model show that an executive would be willing to take on more risk because the output to them in terms of compensation would be greater if there is a greater risk?
In reviewing an application for deposit insurance, just to be clear, our responsibility goes to deposit insurance, not to the charter for the institution. But certainly one of the key components of it would be the management plan and the proposed executive leadership of the institution, both management
Sure,
and
but
board.
you're determining that, you're determining the insurance deposit would let us know that, hey, they need greater insurance because you view them at a greater risk than others would, right?
And an appropriate compensation scheme for the institution with not undue incentivizing of risk would be part of the things we'd look at in terms of reviewing the application.
So, because it's my belief that the compensation models must be, and I'm glad to understand, in consideration by the FDIC in terms of how much deposit do you believe that they should have, or what is the insurance compensation that's needed. And I'm thankful for the information that you've given us. Thank you, Mr. Chairman. I've run out of time. I yield back.
I thank the gentlewoman. The chair recognizes the gentleman from North Carolina, Mr. Walker, for 5 minutes.
Thank you, Mr. Chairman. Thank you, panel, for being here today. Being from North Carolina, I am concerned that over the last 7 years, we've lost 40% of our charter banks, or charters, with no new banks being chartered during that time. Bank closures and consolidations account for most of the loss, but this is still a dramatic trend in banking and threatens the future of community banking as a business model. Now, over this time, a new bank has not been chartered in North Carolina. That's since 2009, 7 years. The cost of the application and the regulatory compliance are cited as early obstacles to profitability. As everyone testifies today, at least from what I've heard, seems to agree that community financial institutions have an important role in our economy. What has the FDIC, Chairman Grunberg, done or considered to lower the barriers to entry for these new bank charters?
I think what we have under control, Congressman, is the application process itself, and trying to make that as user-friendly and responsive as possible. And fair to say, a significant aspect, particularly for smaller groups trying to set up a smaller institution, are legal and consulting fees to support the application process. To the extent that we, in the course of working with an applicant, can help defray those costs, provide them the information and support and organizing group needs, our goal would be to try to contain that cost.
When you say your goal is to contain the cost, is that something you're regularly looking at, reviewing, discussing, talking about, and is there any action steps, or is it just something that's laid out there as a goal somewhere in the future?
No, as I indicated and as I outlined in my testimony, we are pursuing a number of steps to try to promote new applications, including holding meetings in regions around the country for interested parties and industry groups to walk them through and explain the application process and encourage them to engage with us, as well as working with the state and federal agencies who are responsible for chartering new banks and who are our partners in terms of entry to the system.
I appreciate that. Just curious, maybe for me, maybe for the public, what would be the cost or capital needed to charter a bank today, and what are the factors that would affect the amount of capital required to grant this charter?
It's hard to generalize. I think the capital required of the institution would be related to its business model and the risk associated with it. It's generally a minimum of $2 million, but I think in practice it's more $10 to $20 million of capital is probably the more general experience. And I think in terms of a startup cost for just putting the application together, it probably runs close to $1 million.
In these meetings and discussions to work for us on the cost and some of the startup fees, has the FDIC considered streamlining the business plan for a de novo bank applicant?
I think we'd like to make it as simple and fast as we can. You know, we have a balance to strike. That's really what we want to facilitate the entry. At the same time, we have to ensure that the institution that's going to be established is going to benefit from federal deposit insurance. And so we have to be sure both that the process is as user-friendly as we can, but also ensure that the new institution established can meet the standards so it can be
Sure,
successful.
and with the de novo banks, one of the major costs is hiring the regulatory attorney. The question is this is incredibly expensive. Could this process be streamlined so that no regulatory attorney is necessary?
I don't know that I could say or advise a group not to have legal counsel. To the extent we can simplify and work with the institution to reduce that cost, that would be an objective.
And what considerations or accommodations is extended to new charters in the area of regulatory oversight?
Well, I think it's important in the initial three years of the establishment of the institution. You can look at it both ways. You want to have careful oversight in the initial period as they get themselves started up. That's a period of risk for a new entity. And I would view, we have more attentive supervision, and I would view that as actually supportive of the long-term success.
And if I have time, maybe to expound on this last question. In North Carolina, we have seen successful non-traditional creative bank structures like Square One Bank in Durham and then Live Oak Bank in Wilmington. Will non-traditional charter applicants still receive favorable conditions from the FDIC, assuming all of the boxes are checked, capital management, et cetera?
We'll work with any group that has an interest, Congressman.
My concern, from what I'm hearing over the hour or so testimony today, is that, let me ask you this, how long have you been chairman of the FDIC?
I was confirmed as chairman in November 2012.
Okay, so we're coming up on 4 years. I hear a lot about, hey, these are our goals, this is something we're looking into, we're having meetings, we're checking into this, even some of the questions earlier about any kind of pushback on some of the whistleblowers. I hope that some of that is actually being processed and some of those goals are being met in the days ahead. Had a couple more, but my time has expired, so I'll yield back to the chairman. Thank you.
I thank the gentleman. The chair recognizes the gentlewoman from Illinois, my good friend, Ms. Kelly.
Thank you, Mr. Chair. I would like to address two issues affecting the ability of the FDIC to keep the financial system safe. First, I'd like to ask about the FDIC's orderly liquidation authority. The Dodd-Frank Act permits large and complex financial institutions that are failing to be resolved through a process known as orderly liquidation. Mr. Chairman, can you please explain what that is and how is it different than bankruptcy?
Thank you, Congresswoman. Just to put it in context, prior to the crisis, the FDIC's resolution authorities, or authorities to manage the failure of a financial institution, was limited just to the insured institution, the insured bank itself. What we saw during the crisis, that it wasn't just the insured bank, but actually the parent company and the consolidated financial company of these very large institutions that got into difficulty, as well in some cases non-bank financial companies. Lehman Brothers is perhaps the most striking example. And the FDIC had no authority to place either the consolidated complex financial institution or a non-bank financial company into a public receivership. The orderly liquidation authority that you mentioned actually provides us those authorities. So it's really a threshold capability if we were going to try to actually manage an orderly failure of a systemic institution like this. It was an authority we didn't have in 2008, and it is an authority we have today.
If another financial crisis were to occur today, we hope not, could a failing financial institution be resolved through bankruptcy?
I believe we have the authority and capabilities today that we didn't have in 2008. I would just say, though, until we actually do it, and then I would be a little modest about making heroic assertions, but I do think we're in a very different place today than we were back in 2008.
Professor Johnson, do you agree with that? Is bankruptcy a feasible way to resolve a failing institution at this point?
Well, I want to make sure I understand the question, and the wording is really important. Bankruptcy generally refers to the process where the FDIC is not involved. You go to the courts and it's administered as a court-run process. That's the standard, obviously, for non-financial companies. We have attempted that sometimes for financial companies. For smaller, relatively simple financial companies, yes, bankruptcy does work. For any kind of large, complex financial institution, bankruptcy didn't work in the past, would not work today. It would be a catastrophe. You'll be back to Lehman Brothers. That's why we have the OLA. That's why we have the potential for the FDIC resolution process. I think that could be helpful under some circumstances, but I think that the large, complex institutions are still a bit too big and too complex, and that none of them have produced living wills, to the best of my knowledge, that really would assure us that they could be resolved in an FDIC-run process without major negative effects on the financial system and on the economy.
Our chair of financial services has recently proposed legislation to rescind the FDIC's orderly liquidation authority. Professor Johnson, are you familiar with that?
Yes, I am.
And what would be the effects?
I think it would be a disaster. I think that we experienced vivid and horrible detail in 2008. What happens when you say a large financial institution is failing, let's have it sorted out by bankruptcy? Lehman went bankrupt. Let's be clear. Lehman went through the bankruptcy process, and I don't think any of us enjoyed the consequences, and I really don't think we want to go back there.
The chairman also has the Choice Act, which would require FDIC to calculate and weigh the costs and benefits of new regulations. Professor Johnson, again, in the financial services arena, how credible are quantitative cost-benefit analysis?
Well, look, if you're talking about the full costs and benefits of financial regulation, including avoiding a massive recession with millions of jobs lost, the loss of at least 1 year's GDP, low growth for 8 years. If that's in the cost-benefit analysis, then I'm in favor. But unfortunately, that's not what is put in either in the legislative language or in the standard interpretation of cost-benefit analysis. They use a much narrower definition that, frankly, is deeply, deeply misleading with regard to why we have financial regulation, how financial regulation works, and what happens when it fails.
Thank you. Chairman, I won't ask you to comment on that, but can you tell us, does the FDIC currently conduct any analysis of proposed regulations, benefits, and costs?
Actually, we do, Congresswoman, and as you may know, we're in a process required by federal statute called GRIPRA, which requires the federal banking agencies every 10 years to review all the rules and regulations that we've issued and determine whether any of them are no longer necessary or should be modified. And we're actually working on that process now. We're required to issue a report by the end of this year. And I think we'll be, we've already made some changes and we'll be proposing additional changes in an effort to reduce regulatory burden and the costs associated with them.
From a nuts and bolts perspective, how would a quantitative cost-benefit analysis affect the FDIC's ability to put forward new rules, especially in the midst of a financial crisis?
It would really determine on how, as Professor Johnson indicated, how it was done. And since I'm not really familiar with the legislative proposal, I'd rather not comment on that, if that's okay.
I believe the gentlewoman's time has expired, but it didn't expire 5 minutes and 48 seconds ago, but I think we're 48 seconds into an expiration.
I was wondering.
All right.
Thank you.
All right, thank
The gentleman from Tennessee is recognized.
Well, thank you very much, Mr. Chairman. Mr. Gruenberg, I have a letter from the Tennessee Bankers Association which says, among the key factors that are both restricting new banks and driving consolidation are the ability to attract the very high levels of capital required to start a new bank, and for that matter, the high levels of capital required after imposition of the Dodd-Frank Act and the new Basel III requirements. And secondly, the regulatory burden imposed by the Dodd-Frank Act, which requires significant resources to be directed simply toward compliance issues. And I've really heard of that second matter from many bankers. But you talk about these high capital requirements. I heard Mr. Browning say that his people had $30 million they were planning to put into this bank. And I'm wondering, can you give me a rough guess? I've been provided by staff saying that there was only one bank approved, new bank approved in 2013 and one in 2015. In the last 3 years, let's say, or 3 or 4 years, how much capital have these new banks, the 2 or 3 new banks that have been approved, how much capital have they come up with?
I couldn't tell you that offhand, Congressman. Would be glad to check on that and come back to you if that would be okay. I think in regard to the application standard, the capital requirement today is the same capital requirement that's been in place really since 1992. So we do require higher capital for startups for that first 3-year period. And the reason for that is in the startup phase of an institution, one, it's going to be a growth period, so they need the capital to support the growth. 2, startups generally experience higher rates of loss as they get their business going. And 3, they need the initial capital just to get the operation.
Well, how much capital do you require generally?
It's an 8% minimum requirement.
8% of what?
It's an 8% leverage capital requirement related to the total assets of the institution. And that's been the minimum requirement since 1992. And you can argue that it's some people argue that it's too high. Others have argued because of the failure experienced during the crisis, it should have been even higher. We think it's a reasonable basis to assure a significant probability of success as the institution gets started and tries to get through the initial startup period.
Well, you may need to take another look at it if nobody's applying for new banks anymore, or they're not getting any approved. Let me ask another question real quick before my time goes. I know when they passed the Dodd-Frank law, and I was here then, the people who supported it said they were doing it to get back at the big banks and Wall Street firms that led us into the recession. Yet 2 years ago, George Mason University released a report that said that since the financial crisis, U.S. banking assets and deposits have continued to consolidate in a handful of large banks. The 5 largest banks now hold 44% of U.S. banking assets compared to 23.5% in early 2000. And I'm wondering, Mr. Williams, have you seen that? Are the total deposits continuing to just go to the big giants? And is it possible for a small bank? I heard one banker say that it's not possible for a bank under $1 billion in assets to even survive today. And have you seen more of your time and expenses being devoted to compliance costs as compared to, say, when you started in the banking business?
Oh, my goodness, yes. When we started the bank, we actually didn't have a compliance officer, and we treated the consumer better than we do today. Now we have a number of compliance officers. We have an unbelievable regulatory burden, and essentially all of that cost has to be passed on to the consumer. It's passed on to the investors, but it's not a productive cost. The fundamental factor about compliance is complexity favors the large. I'm going to say that again because it's important. Complexity favors the large. The regulations from Dodd-Frank would fill several phone books. Just paying an attorney to read them is a significant expense. That's not a problem for Bank of America, but for Gulf Coast Bank, it is a big deal. And
what are your total assets? What size is your bank?
$1.45 billion.
Is it possible for a small bank to survive today, or it's certainly becoming much harder, isn't it?
It is, but it's more difficult. It's a challenge, and the more regulation you have, the larger you have to be to succeed. And we've raised the level of complexity to the point that it's very challenging for the very small banks, the 100, the 200 million, to make money. And unfortunately, we don't go back and relook at the regulations. We say that we will, but we add 16,000 bricks to the wagon, we take away 3, and as a banking industry, we're supposed to applaud that effort. The regulations never decrease. They only increase.
The more any industry becomes federally regulated, the more regulated it becomes, the more it ends up in the hands of a few big giants. Thank you, Mr. Chairman.
I thank the gentleman. The chair recognizes the gentleman from Massachusetts, Mr. Lynch. 5 minutes.
Thank you, Mr. Chairman. Look, I actually love my community banks. Those are the banks that are making the loans, doing the mortgages, helping folks out in my community. I actually have sponsored a regulatory relief bill for community banks because they're making the loans, they're not doing all this crazy stuff with derivatives, they've got adequate capital, and they're engaged as traditional banks. But I do want to look at the data here because I don't think there's a conspiracy within the FDIC to basically, manipulate the application process to stop banks from coming into existence. And that seems to be the suggestion here today. If you look at the data, in 1985 we had 18,000 banks. Today, we got a little over 6,000. It's almost a 2/3 decline. But if you look at what happened, about 85% of those banks went out of business because they merged with other banks, and they became bigger and bigger. As a matter of fact, as my colleague just pointed out, the 10 biggest banks back in '85, they had 19% of industry assets. But today, they're closing in on 60%. Those 10 banks control almost 60% of industry assets. So we've got these huge whales out there that are basically gobbling up these other banks. And that's not healthy. But it is not the application process that is causing that. At the same time, we've got a very, very low interest rate environment. We've got very, very low margins here between, if you take deposits and, you're getting very low interest on that, and you have to lend out your money at a very low interest rate to be competitive. There's a very low margin of interest for banks, so it's tough to operate in this environment. So I don't think there's any secret plot out there. It's just a tough environment, and that's why, not surprisingly, de novo bank applications are down. It's just a tough time to try to get into the business. And I do want to say that, that idea of reducing the regulatory burden for community banks is a good one. And I know that Tom Hennig from, I think he's on the board, right? On your board, Mr. Chairman? He's got some good ideas. He actually sat down with a number of the members on both sides of the aisle here, and we think that we can come up with a good regulatory relief bill for community banks that are doing the right thing and just trying to help local small businesses, and that's the direction we should be going in. But let me ask, Mr. Johnson, is there something I am missing here, apart from what I laid out in terms of the consolidation going on, the small number of banks that are in existence today, and the pressures, or do you really think there is this conspiracy out there or some type of nefarious plot to stop banks from coming into existence?
Mr. Lynch, I don't think there's any kind of conspiracy. There's a long-standing process of consolidation in the industry, which was prompted by Congress, by the way, when it repealed the restrictions on interstate banking. So that's what happened historically.
Yeah.
And as the banks were able to spread across states, you got this process of consolidation. The one big thing we haven't talked about today, perhaps, is economies of scale in banking due to technology. So the fact that you have pretty demanding information technology requirements is another squeeze on the banks under $100 million. And this has been looked at carefully by the FDIC, among others. Economies of scale, so in terms of what your costs are relative to your assets, they come down quite quickly until you get to about $100 million in assets. Then it flattens out. So this is more pressure on the smaller banks. Historically, they were more important than they are today. And from a de novo bank, it raises the amount of capital that you need up front, because you've got to get to that economies of scale. That just reinforces what you're saying, Mr. Lynch.
Okay. So we have a list that the FDIC looks at when somebody applies to get a charter. The financial history and condition of the depository institution, adequacy of capital, future earnings prospects, general character or fitness of the management, risk presented by depository institutions to the Deposit Insurance Fund, convenience, needs of the community, and whether its corporate powers are consistent with the purpose of the Act. Any of those, do we think any of those are inappropriate, that we might be able to reduce the number of factors, or do we think those are all sound?
I think our experience is those are pretty much basic considerations for a bank application.
Okay. My friends at the American Bankers, any of those factors you think are overbearing, or?
The factors have been the same factors for a number of years. The dilemma is the application. Where at one time it was relatively easy to start a new bank, now it is incredibly difficult. And I think we've used the pendulum example. It's gone too far.
Yeah.
If you prevent a single bank failure, you'll also prevent an awful lot of success. You know, in my other life, I'm a pilot and I fly on medical patients to get treatment. Well, over the 20 years I've done this, we've noticed a significant improvement in cancer treatment. It's because they've tried a lot of things that didn't work. Well, new banks will fail, but they present a trivial risk to the system and the fund. But if you stop new banks from failing, you also stop banks from succeeding. And a bank like mine doesn't exist, the community's weaker. And in a small town, if you don't have a hometown bank, you really don't have a vital economy.
Right. So you're looking to strike that balance.
Yeah, and I think we've gone too far the direction of no failure.
Okay. I've abused my time. I want to thank the gentleman for his courtesy.
I thank the gentleman. Chair recognizes the gentleman from Georgia, Mr. Carter, for 5 minutes.
Thank you, Mr. Chairman. Thank all of you for being here. I would certainly be remiss if I didn't comment on one of the comments that was just made about the mergers that have taken place in the banking industry here in recent years. Let's keep in mind that a lot of those mergers weren't necessarily wanted. A lot of them were fire sales of banks selling to bigger banks before they went out of business. You know, full disclosure here. First of all, I've served on community bank boards. Full disclosure, I'm a small businessman. If it weren't for a community bank, I would not have been able to start my small business. I went into business November 21st of 1988, and it was because a small community bank was willing to extend me credit to open up my business. So I am a big community bank fan. And I will tell you, Mr. Williams, I couldn't agree with you more. When I was serving on the bank board, previously to becoming a member of Congress 18 months ago, the only new hires we were making were compliance officers. That was all we could do. Was every time we made some money, we'd hire a new compliance officer. That was the only thing we could do. Mr. Greenberg, I want to ask you, Do you know what bank deserts are? What are bank deserts? Can you just briefly tell me?
I'm sorry, I'm not familiar with
Well, I would refer, it was a term we kind of used in Georgia. You're aware of what's happened in Georgia.
Yes, sir.
I believe Georgia leads the nation in the number of banks that have closed since all this started. You know, and listen, I've listened to all of you during the day, and I know you all agree that community banks are important, and they're necessary, and we've got to have them. But bank deserts exist in both rural and urban areas, particularly in rural areas. In the state of Georgia, we have 159 counties. We've got 48 counties that don't have a locally chartered bank. That would be referred to as a bank desert. Nationwide, there are 654 bank deserts in rural communities and 351 in urban areas where we don't have a locally chartered bank. Mr. Chairman Greenberg, can you tell me, it sounds like what you have articulated here today, that you're concerned, that the FDIC is concerned about these bank deserts and the need for community banks. But I'm still not clear when we talk about the convenience and needs of the community, what you mean by that.
Well, first of all, Congressman, you're correct. I think we're very concerned about it. Community banks play a critical role that large institutions really cannot fill. For exactly the point that you were making, community banks do relationship lending, particularly with small business, that is very hands-on, and that is not the kind of business the large institutions are interested in. So they really fill a critical, but let me just come to your, so your question is, if you could just come.
So you acknowledge that. Tell me what you're doing about it.
Oh, look, we want to do everything we can to,
I know there's a difference in want and doing. Tell me what you're doing about it.
Well, so we can't change the interest rate environment. That's not under our authority. What we can try to do that's within our authority is at least to try to make the application process that groups interested in forming a bank as user-friendly and reduce the cost, and to the extent we can, reduce the reliance on what can be expensive consultants for a group to put together a new financial institution. I think that's a contribution we can make, and we are looking at ways to do that.
Okay, I've got very limited time, and I've got to, let me ask you, Chairman Greenberg, how many bank charters were approved last year? How many new bank charters were approved last year?
Just one, wasn't it? Yeah, I believe just one, Congressman.
One?
Yeah. Yeah.
Did you say one?
Yes. No, at the end of my testimony, we provide a chart listing all the new charters, and what we've really had is an unprecedented experience in the period since the financial crisis. We really have not seen, we've seen only a handful of new charters and only a handful of applications, because we have an economic environment that's extraordinarily challenging to start a new institution. I think that's the point that was made earlier.
But how are you going to help? I mean, you know, we need to help these people.
I agree, but we can't.
We've got 48 out of 159 counties in the state of Georgia that do not have a locally chartered bank. If small community banks go away, small business goes away.
I couldn't agree more, Congressman, but we don't, community banks in particular.
But what I'm hearing, and I'm sorry, but what I'm hearing is that is the problem. There's no transparency, that the process is difficult, it's hard to navigate.
If you look at our website, our application and the requirements are there for everyone to see, that which I think is the bottom line, and we do work actively with any groups. We are prepared, and we'll look at our policy, at our procedures for deposit insurance applications and try to make them as user-friendly as we can.
Okay, well, my time has expired, but I got to tell you, small business is what made America.
I agree.
And this is killing us. We have got to have it, and we need help. We need you to make it easier. Now, we need to make sure these de novo banks, we need to make sure these community banks survive. If they don't survive, small business is not going to survive. Thank you, Mr. Chairman. I yield back.
I thank the gentleman. We'll now recognize the gentlewoman from New York, Ms. Maloney, for 5 minutes.
Thank you very much. And I would like to discuss the too big to fail and living wills for large financial institutions, and Professor Johnson mentioned earlier in testimony when we had the crisis that cost this nation $15 to $18 trillion in lost homes, lost jobs, the worst, and it was caused by mismanagement, the first major financial crisis in our history that could have been prevented with better regulation and management of banks. And he alluded to the problem that we faced. We could either let it fail, like we did with Lehman, or we could bail it out, like we did with AIG. Neither response was a good one. So in Dodd-Frank, we came forward saying that the largest financial institutions would be required to submit to regulators, including the FDIC, a resolution plan to be implemented in the case that they failed. And these plans were called the living wills. And if a bank consistently fails to provide credible plans, Dodd-Frank permits regulators to increase the bank's capital, liquidity, and leverage ratio requirements, or even to require the bank to divest certain assets or operations. So, Professor Johnson, could you please explain why Dodd-Frank permits these penalties?
Yes, Congresswoman. The point, very simply, is exactly what you were referring to, which is we would like every firm in this country to be able to go bankrupt potentially without any kind of government intervention. I think that's a completely shared goal. And that is the case for the non-financial sector. It is not the case, as we learned vividly in 2008, for the financial sector. So the living wills are supposed to be a documentation provided to the regulators that demonstrates beyond a reasonable doubt, presumably, that these large financial firms can fail without the FDIC or anyone else being involved. So that's Title I of Dodd-Frank. Title II, the Orderly Liquidation Authority, is a backup in case the bankruptcy process doesn't work. But the FDIC and the Federal Reserve are supposed to be completely confident, by reviewing the living wills, that these banks can fail without any kind of government involvement or government financial assistance or temporary loan or anything. So that's I think, a completely reasonable goal that should be shared across the political spectrum.
Okay, these penalties are really sticks to encourage banks to file credible plans, but they are effective only if banks know regulators will use them. And since 2013, banks have had 4 chances to get this right, but regulators say that most of the plans still have shortcomings. This year, the FDIC found the plans of 5 banks are not credible, and these 5 banks must resubmit their plans by October 1. So Chairman Greenberg, if the living wills continue to be deficient in October, you have the authority to impose penalties at that time in order to protect the taxpayers. Is that right?
Yes, Congresswoman.
And the plans being submitted this October are in some cases the 5th attempts by some of the largest banks to have credible plans. And the banks have shown that their resolution plans are due since the Dodd-Frank. They've known that they have to do this since 2010, yet 5 banks are still not getting it right. And no penalties have been imposed for their failures to produce credible resolution plans. So my question, Professor Johnson, how can the public and the banks be sure that the FDIC is serious about obtaining credible living wills if they're not, putting these penalties forward? And then I'd also like the chairman to answer. So, Professor Johnson.
Yes, Congresswoman, I think it's a very big question. And of course, it's not just the FDIC, it's the FDIC and the Board of Governors of the Federal Reserve System. Yeah. They act together in this. And I'm afraid, for precisely the reason that you identified, because we haven't seen any of these remedial actions required, I'm afraid that public confidence in the FDIC and the Fed with regard to having viable living wills that really would keep the taxpayers off the hook and give us much broader financial system stability, I'm afraid confidence in that is low, and I would presume it will decline further.
Mm-hmm. Chairman?
Yeah, Congresswoman, so as you know, the 8 most systemically important financial institutions submitted resolution plans, living wills, last year, and those plans were reviewed jointly by the FDIC and the Fed. And we recently issued evaluations of those plans, and of the 8, the Federal Reserve and the FDIC jointly found 5 of them to be non-credible. That's the standard under the statute, and the statute provides that if we make that joint determination, we together have to issue a notice of deficiencies laying out the inadequacies of the plan, which we did, and all of that was made public in the course of releasing these evaluations. And as you indicated, we gave those institutions until October 1st to submit plans addressing those deficiencies, and will then be at the point of having to evaluate their responsiveness. And as you indicated, the law provides us authority that if the plans don't address the deficiencies, we have the authority to impose additional prudential requirements relating to capital, liquidity, leverage, as well as constraints on activities. And that's a judgment we're going to have to make once those submissions are made October 1.
Mr. Chairman, may I do a follow-up question to his answer? You've had 4 times to have an evaluation. This is the 5th time, correct?
Yes.
And the other 4 times that you've had an evaluation, you haven't come in with the penalties that Dodd-Frank gives you. And so when I was one of the participants in the conference committee on Dodd-Frank, as you know, and I support it. But how do we know, and I think people that are critical have a right to be somewhat critical, that it's going to be implemented if you're not implementing it? What's different this time? Are we going to be going to Plan 6, 7, 8, 9, 10?
I mean, as you may know, Congressman, it requires a joint determination for that.
Yeah, joint, I know, realize.
And the FDIC in a previous round had failed the institutions, but we didn't reach joint agreement. I do think what's important is that in this round we did reach a joint agreement on 5 of the plans, and we're now in a position to see the institutions presumably address these deficiencies, or if not, then there are authorities under the law that would be available to us.
I think the gentleman.
Could I just ask him to submit to you what your outcome is, since we are distracted?
Sure,
this is a very important financial security, safety, and soundness issue, and I think to present your findings, since they're not coming to us, they're coming to you. So I think to give us that information would be helpful.
Okay.
Thank you.
Sure.
When will we have those?
Well, I'm assuming you're relating to the evaluations that were made.
Yes,
yeah,
yes.
and that's a matter of public record, and we'd be glad to provide that to the committee.
Now recognize the gentleman from Wisconsin, Mr. Grothman, for 5 minutes.
Thank you, Mr. Chairman. Are you, we've had several questions before, but when I talk to my smaller banks, going back to what Congressman Carter said, all they're doing is hiring compliance officers, which obviously is, in some cases, just is squeezing, the amount you get in deposits or whatever. In other cases, it's causing a lot of buyouts because these smaller banks, they just can't afford to operate and they allow themselves to be buyout and that sort of thing. Have you kept track of the huge cost to the banking system of the additional compliance? Do you have a dollar figure you can put on that?
We've actually, it's tough to quantify. Clearly, it's meaningful, particularly for the 4,000 institutions in the United States with assets under $250 million. I think for those institutions, the cost of regulatory compliance is significant. It's as a technical matter, it's tough to quantify, but there's no doubt that it's meaningful. And look, I think from the standpoint of the bank regulators, we want to find ways to reduce regulatory burden and cost. We've been undertaking a review as required by the law. I think there are areas we can address, including simplifying capital, risk-based capital compliance, appraisal thresholds. The community banks have raised particular concerns about call report burden. I think there are a number of areas where we can and are planning to take steps that will actually reduce burden and cost, and I think to the extent we can, we really should do that.
Congressman, I have some data. Can I give you the data on this? It's actually from Mr. Browning's testimony. This is drawing from the Richmond Fed's research and the Fed's research, and it's consistent with what the FDIC has also published. Now, I'm not trying to trivialize these expenses and costs at all, including for certain segments of the market, but if you take on average what Mr. Browning's testimony says, he's quoting these academics, the increase is relatively small, and more importantly, the size of these expenses is just too small to have a big effect on bank profitability.
I think, like too many professors, you got to get out of the university and spend more time talking to
I'm sorry, this is the data.
bankers.
Congressman, this is the data, and I do spend a lot of time working with the private
Well,
sector.
that's okay.
With all due
I'm
respect,
talking,
in my university.
We have 5 minutes, and I intended to talk to Chairman Greenberg here. There's been a huge drop in the number of banks. Do you consider that a bad thing? I mean, you know, a lot of local people say, and maybe it's consistent with my experience, you get better service from the small local bank. Do you view that as a bad thing, that we have such a huge drop in the number of banks we've had since a few years ago?
Yeah, I don't view it as a good thing. No, I don't, Congressman.
Are you doing anything to make sure that these smaller banks are able to keep going? Do you view this as a fundamental problem? I realize it's not all yours. I mean, obviously the people who voted for Dodd-Frank wanted to finish off a lot of these small banks too. What are you doing to make sure that we keep these small banks going and they aren't forced to be bought out?
Well, I think it is part of our responsibility. A strong community banking sector has enormous value for the financial system and the economy. I think we want to find ways to reduce regulatory burden and cost. I think that's one way we can do it. We have tried to make our supervision of institutions risk-based and appropriate to the nature of the institution. So for a smaller, simpler bank, we're able to do exams less frequently and try to do it in a way that's really appropriate to the model of the institution. So both in terms of trying to reduce regulatory burden and doing our supervision in a way that's responsive to the business of the bank.
Okay.
Those are at least two things we can do.
Now I get a concern, the Consumer Financial Protection Bureau, okay, that insofar as they get involved here, standards that were meant for bigger banks are kind of seeping down to the smaller banks. Is there anything you can do about that to make sure that this doesn't happen anymore?
I think this so-called trickle-down issue is certainly one of the things we hear most about from the bankers, and we work pretty hard to make clear that whatever obligations are imposed on the larger institutions are not expected of the smaller institutions, and we try to make that very clear in our supervisory program.
Okay. I can see Mr. Williams wants to speak down there. Just 1 second. With you? Sure. Mr. Williams?
Yeah. I mean, with all respect, the unfortunate consequence of the trickle-down is that the regulations like Basel that were intended for the most complex banks are pushed down to community banks like ours, and then you have the pernicious effect of best practices. It becomes a best practice, and then we have to do it. So it may not be a regulation, but then it becomes a best practice, and then it gets pushed down to a $1 billion bank, then to a $500 million. And things that don't make economic sense and weren't intended for banks like ours become realities.
Okay, Chairman Greenberg, could you do something in which you can have a hard rule to make sure this stuff doesn't become best practice or doesn't affect people?
I think we have a pretty clear policy, and I mean, I'm glad to come back to you on that, but we have try to make it very clear in all of our guidance that expectations for large institutions are not imposed on smaller institutions.
Well, my experience talking to my bankers is the same as Mr. Williams. I mean, your expectations aren't being realized, and there's a lot of fear out there in that. I guess I've used up my time, but thanks you. I really hope, you know, maybe people are afraid to talk to you, but when I talk to my small banks, well, I think over time your people become friendlier. We right now, there's a perception we hate small banks in this country. It's not entirely your fault. It's also the fault of the people who put together that Dodd-Frank bill. But I wish we could get back to the day in which we have more small banks and they aren't being forced into being merged. Thanks much.
Thank the gentleman. We'll now recognize the gentleman from Alabama, Mr. Palmer, for 5 minutes.
Thank you, Mr. Chairman. I just want to point out in regard to the impact of Dodd-Frank on small banks that Harvard found that small banks lost 6% of their share of industry assets during the financial crisis, but since Dodd-Frank they've lost 12%. So I do think that validates that we're losing community banks as a result of Dodd-Frank. I think Frank Keating, the president of the American Bank Association, said we're losing one bank a day, 7 days a week. So it is a problem. and particularly in context to the answer you gave Mr. Carter about how many new banks the FDIC approved last year. Did you say one?
Yes, sir.
That is problematic for a lot of us who represent rural counties, and I think practically all of us in Congress have some rural counties. I grew up in a rural community, and our community bank was extremely important to us. Let me ask you this: why have you been able to approve? Why have you been unable to approve the creation of more community banks? What's the holdup?
This has been a subject of discussion during the course of the hearing, but at least it's, as far as we can tell, we've had an extraordinary, really unprecedented economic environment, really in the aftermath of the financial crisis and recession. It's been the longest prolonged period of near zero interest rates really in our country's history. And community banks make money by making loans and charging interest. So when you have a very low or zero interest rate environment, it becomes a significant obstacle to establishing a new institution. We think that's the core issue. If the economy can continue to progress and we see some rise in interest rates, we're expecting to see some increased activity. What is under our control is the process and procedures for submitting an application and working through an application process. And that may be the area where we can make a contribution to facilitating the institution.
I don't disagree that the economic conditions are part of the problem, but I think one of the reasons our economy, for instance, our economy has grown 1.55% over the last 8 years. The 70-year average is 3%. You want to talk about something that's unprecedented. And I think a large part of that is due to the regulatory environment. We've seen record numbers of proposed rules. I think 2011 was somewhere north of 84,000. That record was broken in 2015. I think we'll probably break that record again this year. I think we're on pace for that maybe. And as has been pointed out already, I think the biggest uptick in hiring in banks has been people to comply with regulations. And one of the things that we've got to do, and this, I think, in trying to help our banks, but also to help their economy, is untangle them from all these regulations. Let me ask you this. If the FDC is open to accepting new bank applications, where in the field is the breakdown occurring? And are your field examiners or other senior staff meeting with potential applicants expressing other concerns?
No, look, I think our people are ready and available, and we certainly work closely with the groups that have an interest. I can only say that I think the economic environment remains a challenging one. That's why we're actually seeing, at least thus far, only a handful of applications.
Well, one of the things that interests me in this is the FDC routinely uses financial institutional letters to announce changes for de novo banks. Stakeholders are unable to comment on these. And why does FDC choose to utilize financial institutional letter and then not give stakeholders the opportunity to comment? You know, that might be a way to improve the application process.
Yeah, you know, we have just put out our application, existing application for public comment to take comments from industry and participants on how we can improve it and simplify it. So we do seek public comment. Financial institution letters are a means we use to communicate with the industry and to provide guidance to them.
Don't you think more participation by the folks who are interested in starting a bank would be helpful? Mr. Browning, if I may, I'd like to ask you a question. Did you participate in any meetings prior to your filing with the FDIC, and would a meeting like that have been helpful?
Well, thank you, Congressman. We engaged in a long series of conversations before our pre-filing meeting. We held that pre-filing meeting jointly with San Francisco FDIC as well as Washington, D.C. FDIC. From that pre-filing meeting is when things got a little curious for us.
Did you receive any communications from the FDIC that they, you know, on why they would not accept your application?
So we never actually formally filed an application because we could never gain clarity on what was actually required to submit an application that would be deemed complete. We
So
held a series of conversations for many, many months, but could never gain that clarity.
So you had trouble getting any clear communications that would have helped you in your process?
Yes, Congressman, and the statutory requirements that have been longstanding are themselves clear and I believe adequate. What is different today, and as Mr. Williams explained, the pendulum has swung, is the interpretation and application of those requirements and the authenticity that they're applied within certain segments of the FDIC.
If I may, Mr. Chairman, just one more question. It's my understanding the FDIC does not track pre-file meetings because these are optional. Is that correct?
Yeah, I
And,
believe
and,
that's-
and if it is, why aren't you documenting this?
Would be, I don't think we have a problem doing them. They're voluntary. Some applicants utilize them. We encourage them. But since it's an informal pre-filing process, it's not something we would track as part of the application process. We certainly can and can do that. And as I indicated at the outset, we're undertaking a review of our procedures relating to deposit insurance applications. So that's certainly something we can consider.
I hope you will. I hope you will implement that. Thank you, Mr. Chairman. I yield back.
Thank the gentleman. We'll now recognize the gentleman from South Carolina, Mr. Mulvaney.
Staying right there, Mr. Greenberg, on the pre-filing meetings, can you do that on your own initiative, or would it help if we made the formal request?
We can certainly do that on our own initiative, Congressman.
Gotcha. And here's why I think you're hearing so many of us pound on this lack of new entry into the market. And Mr. Johnson, it's good to see you again. Mr. Johnson and I have talked several times over in the House Financial Services Committee. And while he and I don't agree on many things, what we probably will agree on is if you see an industry that is seeing increasing profits, and certainly one of the criticisms of the financial services industry is they're actually making money, that typically, Dr. Johnson, what we would see is a flow of new entries. New capital will go into someplace that's actually making money. So there's a disconnect here. And I hear what you're saying about the environment being tough for new entrants because of low interest rates, but clearly somebody's making money. And I don't have a problem with that. Yes, Ms. Johnson, I will. I promise I'm last, so they'll probably give me a little bit more time. But I want to stay on this for a second. Let me ask you, let's drill down a little bit more. You don't track your pre-file meetings, but how many applications did you actually formally begin, say, last year? You said you approved one. How many actually formally started the process?
I was corrected by our staff. For what it's worth, there were 2 applications approved last year, and how many?
Received. Out of how many actually got started?
And 2.
Oh, wait. The 2015 is 2, 2016.
Yeah, two applications were received.
So you approved 2 of 2. That's fascinating.
No, I'm sorry, one of those was received in 2014.
Okay. I'm sorry, how long?
No, one of the applications was received in 2014.
How long is it supposed to take to get your bank approved?
As I indicated, the average period from 2000 till today for approving applications tends to be 4 to 6 months, but it can take longer in individual cases.
Out of the 2 that you approved last year, how long did each one of those take?
Apparently within that time frame, Congressman.
Maybe I misunderstood. I thought I heard it again. We're talking over each other a little bit, that one of the applications that was approved this year was received in 2014. Is that not right?
Yeah. Let us come back to be clear, but I believe it was received in 2014 and approved in 2015, but
okay.
Let us come back to you to get it right.
Let me ask this. Mr. Browning, you said that there's some statutory requirements and how long this is supposed to take. Did I hear that correctly?
Well, there's clear criteria on how to evaluate, on what basis to evaluate an application. And the FDIC's internal guidelines suggest that a application review process should be expeditious. Its track record, as the chairman has stated, is typically in the 3 to 6 month range, but it says only in unique or extenuating circumstances should it take longer, and certainly no more than a year.
Okay. I won't ask the question about whether or not everybody believes that new entry into the market is healthy, because I think other folks have asked you that question, and everybody universally has said that it is. Whether you're running the Deposit Insurance Corporation or you're an academic or you're actually in the business, that new entrance is helpful. Mr. Greenberg, you said you were doing some things to help encourage that, and you said you were trying to reduce, you said regulatory burden can act as a barrier to entry. By the way, off the top of your head, do you know of any portions of Dodd-Frank that perhaps shouldn't be applied to community banks?
I don't know about, I don't know that I have a comment on that, Congressman, off the top.
Well, if you wouldn't, who would? I mean, I think we all admit that Dodd-Frank, even those of us who opposed it, I wasn't here at the time, was designed to supposedly prevent another meltdown with the large financial institutions, was not intended to deal with necessarily the community banks that weren't at all involved during the financial meltdown. In fact, some places were actually profitable during that time. You've heard testimony that said that there is a trickle-down theory. So my question to you is, have you seen the trickle-down theory? And can you name any portions of Dodd-Frank that were never intended for perhaps smaller financial institutions, but that have ultimately impacted them?
One area we've tried to be clear about is that, Dodd-Frank does require stress tests for institutions over $10 billion.
Right.
And I think there was a concern that relates to this trickle-down issue, that we were effectively subjecting the smaller institutions to the stress test requirements.
What about the Volcker rule? Do you think that should apply to small banks?
The Volcker rule is finally approved. Actually, for small, if a small bank does not engage in the activities relating to the Volcker rule, there's no compliance.
You're absolutely right. Except they have a regulatory burden to prove that they don't participate, don't they?
Only if they simply have to have a policy statement stating that, and even if they do engage in it, all that's required of them, as I understand it, is a policy statement as to how they engage in the activity.
You mentioned in response, I think, to Mr. Carter, that you had taken steps to reduce the regulatory burden on small banks. By the way, did I hear you correctly say it costs about $1 million to do this?
To start a new institution?
Yes, sir.
I think that's the average cost, yeah.
All right. And I also heard you say that the minimum amounts you'd like to see in terms of capital are someplace about $2 million, but that the average is someplace between 10 and 20.
I think, yes, sir.
Does that ratio bother you at all? That it might take up to 50% of my working capital to get approved for my bank?
To the extent we can lower the cost in regard to the $1 million that you're referring to.
Correct.
Yeah, to the extent we can lower that, and a lot of that, as you know, is accounted for by legal representation and utilization of consultants. To the extent we can help reduce that, that's.
Can you give us 2 or 3 examples of the ways you've reduced the regulatory burden or the costs in the last year? If we're trying to encourage new entries, can you give us 2 or 3 real examples of what the FDIC is doing to reduce those barriers to entry?
Well, we had considerable concern by smaller institutions in regard to so-called S-chapter banks and how they dividend down. And we were able to adopt a policy to make it clear that they can dividend down to their shareholders, which was an important, and that's a large number of community banks.
Yeah, but that only, but okay, there's
several thousand, I think.
But it hasn't worked, right? I mean, if you've only got 2 applications and you got 2 approvals, it hasn't encouraged new entry into the market.
Oh, no, I thought you were speaking generally to regulatory burden on community banks.
I'm asking what you're doing to try to encourage new entry.
Yeah, I think probably the most significant thing we've done, during the crisis, because de novo banks were failing at twice the rate of the industry as a whole, we have had a 3-year monitoring period for new institutions. During the crisis, we extended that to 7 years in an effort to reduce the number of failures. Now that we're past the crisis, earlier this year, we were able to eliminate that extension and went back to the 3-year monitoring period, which is something I think the industry thought was worth doing.
I could go on, but I've already way over my time. You've been very gracious, Mr. Chairman.
Let me, gentlemen's free to ask another set of questions in another round, but let me go first to Ms. Maloney of New York.
Thank you, Mr. Chairman. This is really a very interesting hearing, and I thank all the panelists. Chairman Cummings regrettably had to go to another meeting. He has a conflict, but he asked me to get some clarification on Mr. Browning's testimony. And in your testimony, and you talk about your startup on your LinkedIn page, and you state that you, and I quote, led strategy and execution of a de novo bank charter application, end quote. You also say on your LinkedIn page that you, and I quote, halted filing due to the Volcker Rule constraints at a parent company. I would first like to ask our resident professor, Professor Johnson, if you would give us a good definition of the Volcker Rule. It is thrown around in every discussion. Give us a good definition of the Volcker Rule.
Well, the Volcker Rule, which is complex in its details, is designed to reduce or eliminate or substantially reduce proprietary trading by financial institutions, by banks. So there should be you're not allowed, if you're a bank, to engage in more than a small amount of trading in securities for your own, using your own capital for your own account. So it's separation of client activity from proprietary trading.
Okay, thank you. So Mr. Browning, my question is, you said on your, as I said, your LinkedIn page that you halted it due to the Volcker Rule constraints. Exactly what were the Volcker Rule constraints that prevented you from moving forward with Stern Agee's FDIC application? This question to Mr. Browning.
Yes, thank you, Congresswoman. This simply, without getting into the extremely complex mechanics of the Volcker Rule, which I'm happy to follow up with you on, this came down to a business trade-off. The business, Stern AG, had been around for a century. It had multiple avenues to pursue. It was pursuing actively a bank charter, and that was its primary focus, where it was going to dedicate substantial capital. As we worked through the process, we felt we would never actually achieve the desired end result of gaining a deposit insurance and a bank charter, and therefore, Stern AG made a business decision to halt that process, go into another line of business that involved the Volcker Rule, and as a result of that, we could not pursue the bank charter any further. It basically foreclosed that option for Stern AG. But it was a business decision predicated on the fact of our experience in the application process and the lack of clarity, what we deemed an inauthentic application of those statutory criteria, that we would never be successful. So decisions at the parent company were made to pursue another course that took them down a path engaging in the Volcker Rule activities.
Well, Mr. Cummings is very interested in this, and he would like to know specifically, even though it's complicated, what prevented you, so you said, your application, how did the Volcker Rule prevent you from going forward? And also he wanted to note that you did not provide the committee with any documents. The FDIC has produced documents in response to the committee's request, and one of those documents dated May 27, 2014, provides information regarding the Stern AG. This document states that the bank would be owned by Stern AG, a brokerage firm, and would, quote, be funded via sweep accounts from consumer brokerage accounts, end quote. So, Mr. Browning, is it correct that your proposed ILC would have been funded primarily in this manner?
So that is very different from the Volcker Rule implications. But Congressman, yes, you're correct. Using sweep deposits, these are deposits from Stern AG. They have retail one-on-one client relationships with these brokerage account holders. Those deposits are swept into other banks today. Having that primary account relationship, we were to take a small portion of those deposits to sweep them into this bank. All of those deposits are FDIC insured in other banks today. There were roughly 4 to 5 times the volume of deposits in that program that this bank needed, so we were planning to take a small portion of those deposits.
Okay, Professor, my final question. Professor Johnson, what are bank sweeps, and are they as stable a source of capital for a bank or other sources? And if I may, because this is a deeply debated issue before Congress, if you could get back to us in writing, even though it's complicated and intricate, exactly how the Volcker Rule would have prevented you. But the last question is to Mr. Johnson. Yes.
So, Mr. Browning can correct me, but my understanding of this in general would be these are funds that clients have made available for trading, buying, and selling securities, and you obviously have some cash available because you've sold something or because you're planning to buy something and you haven't yet bought it. I believe what they'll be doing is sweeping that out of an account which perhaps was held at another bank. I'm not sure about that, and sweeping it into their bank. And the bottom line, Ms. Maloney, would be this is less stable as a source of funding than a typical retail deposit, which is not subject to daily decisions that people are making. Should I buy securities? Should I sell securities? Those are big decisions relative to the underlying amount of funding. We don't do that, obviously, in our day-to-day retail financial transactions.
Thank you. Does Mr. Browning want to respond?
We could debate the technical aspects of the program we plan to use, which we laid out in great detail to the FDIC to show that these were actually dedicated deposit funds not used for other purposes. They were put into savings account deposit programs to be FDIC insured, and that there was a structure in which these were the last funds to ever be touched. So it would be mathematically proven to actually be more stable than retail checking accounts.
Thank the gentlelady. Mr. Johnson, did you ever review prior to this hearing the information in Mr. Browning's application?
I did.
Can you make your own?
I did have a chance to look at his testimony that was available on the table, and I am quite a quick reader, Mr. Chairman, yes.
Yeah, I think it's pretty cavalier for you to pass judgment on the entire process by which Mr. Browning was trying to interact with the FDIC, and for you to pass judgment on that, but that's my judgment. So,
sorry, Mr. Chairman, I didn't speak to that at all in anything that I said
think you
today.
did. I think the record reflected. I think you were very cavalier about that. We'll now recognize Mr. Meadows for 5 minutes.
Mr. Johnson, we will have a follow-up discussion about the security of sweep accounts versus a traditional deposit relationship at some particular future time, but I can assure you, being very familiar, I don't know that your statement is accurate 100% of the time. Would you agree with that?
Well, I look forward to discussing these details with you further, Mr. Meadows.
But would your statement be accurate 100% of the time that sweep accounts are not as secure as traditional banking relationship deposit accounts? 100% of the time? Your sworn testimony.
So
I would challenge you, I would be careful because it's sworn testimony. Is it 100% of the time? Is that an accurate statement?
Look, I understand it's sworn testimony. The chairman has already said something about my
Mr.
sworn
Johnson,
testimony that I believe
yes
is
or no?
accurate, Mr. Meadows.
You're asked a direct question. We expect a direct answer. Answer
100%
Mr.
of the
Meadows'
time.
question.
I feel that you're trying to trap me here, Mr. Meadows, with something.
No, I'm
I think
not.
this is
I'm trying
unfair,
to get,
and I think it's unreasonable, Mr. Chairman, for you and for Mr. Meadows to put me in this position.
well, it is unreasonable for you to challenge the integrity of someone sitting to your right when your statement may not be accurate 100% of the time.
Mr. Meadows, I'm not challenging Mr. Browning's integrity, and there's nothing in the record today that will demonstrate to any fair reader that I have challenged his
Well,
integrity.
I invite you to come to my office, and we'll have a long economic and perhaps financial discussion over coffee that I'll be glad to provide, Mr. Johnson.
Mr. Meadows, I would be delighted to have that
All right,
conversation.
thank you. Mr. Grunberg, let me come back to you because there's 3 different areas that we need to clear up. One is you have laid out in very, what I would classify as ambiguous terms, how you're going to make sure that new bank applications improve. You've talked in generality, and in the sales environment, we would say that's like vaporware. What I need from you is a business plan. If you were a bank applying for an application for a new charter, based on the ambiguous nature of your plan to improve it, it would be denied. And so I guess what I need are specific timeframes. What can a consumer wanting to establish a new charter expect if they have a pre-discussion, because there are comments that you have a don't call us, we will call you mentality on those pre-application meetings as it relates, which provides a chilling effect in terms of new application. And I guess the results speak for themselves. If we only had 2 applications last year, there is a problem somewhere. Wouldn't you agree with that?
I agree with that.
Okay. So here's what I need are specific deadlines that if someone contacts you, and I don't want to go over historical because it was much faster prior to 2007 than it is from 2010 to current timeframes. What kind of time frame can a new charter application expect to get a real response from you? And what are those benchmarks? And so I'd like a business plan, and can you get that to this committee in the next 120 days?
I think we probably can.
Thank you. All right. Further, on all the applications that are either pending or have been denied, do you know what the total market cap that we're looking at? I mean, what would be the capital requirement for all of these? Because Mr. Browning said his was $30 million that he was going to provide, and you said that you can approve most that are $2 to $3 million. What are we looking at?
I don't think I could tell you that off the top.
Well, we need to find that, and so that's what I'm asking, whether it's in the pre or the official filing. We need to know, because when we're talking about saving the American taxpayers' dollar, you could potentially approve 100% of these, and we're talking about a gnat on an elephant's back in terms of other regulatory compliance issues in the banking industry. Wouldn't you agree? That these are small potential risks to the American taxpayer.
So let us see if we can get back to you on that.
Would you agree that it's small relative to the entire financial institutions? But you can get me a market cap on what we're looking at, the potential.
I think that's what we'd try to do.
All right, in that same 120-day time frame?
Try to do that.
Okay. Then the last thing that I would ask for you is Mr. Mulvaney was asking about potential Dodd-Frank compliance issues that should not apply to small or medium-sized banks, and you didn't want to give an official response to that. Here's what I would ask you to do, is officially respond to this committee in writing what Dodd-Frank compliance issues should not come all the way down to the smaller, mid-size, or community banks, and what should Congress look at to perhaps amend the Dodd-Frank regulations, because it is perhaps too onerous on those smaller institutions that do not provide the same risk that a larger institution perhaps. Can you provide 3 of those within the next 30 days?
Well, let us go back and take a look at it, and we'll come back to you in 30 days with some thoughts on it, if that would be okay.
All right, I'll yield back. I thank you.
Will the gentleman yield to the gentlelady from New York for a moment, please?
Sure.
I would also like to add to the gentleman's question, Basel III. Now, the complaints that I get from from the community banks are the requirements of Basel III, which is international banking. And they say to me, and it makes all the sense to me in the world, we're not involved in international banking. We are involved in helping a community. We're not over in Basel, Switzerland, or any other place. And why do and they complain, believe it or not, Mr. Meadows, more in my district. And I have a lot of community banks that saved the city during the financial crisis. They were the only ones providing loans. But in any event, their major concern to me is the Basel III requirements, that is just killing them. And I don't see, maybe this is too simplistic, why you just can't say, if you're not involved in international banking, then you don't have to do Basel III requirements. I think that's a simple way to look at it, but then I'm always told, oh, you can't do that. But I am very sympathetic to it. When somebody needs a college loan, when they need a house loan, when they need a small business loan, as Mr. Williams talks about, it's usually 100% the community banks that are providing it. And so I'm very sympathetic to the statements of Mr. Mulvaney and Mr. Meadows on this, but I would like to add that to, if Mr. Meadows would allow that, to what are the things that you think are in Basel III that are needed for safety and soundness for community banks? It doesn't make any sense to me at all.
And I think it's fair to say, as part of this GRIPA review process, the review of the regulatory regulations issued, one of the issues that the agencies, the 3 banking agencies, are focused on is simplifying risk-based capital, which would be Basel III for community banks. And to do that, it would require a joint rulemaking, so the 3 of us would need to get together on that. And we are working on that, and I'm hopeful we can come up with a joint proposal in regard to that.
Thank you.
A joint proposal.
We'll now recognize the gentleman from South Carolina.
He's got his hand up, community bank.
Thanks, Mr. Chairman.
Hold on. Let me allow Mr. Williams to add on to that, and then we'll recognize Mr. Mulvaney of South Carolina.
Just to further your comments on Basel III, I was in Europe this spring. The Europeans are shocked that we apply Basel III to community banks. They said it should really only apply to the 12 or so banks in America.
Thank the gentleman. We now recognize the gentleman from South Carolina, Mr. Mulvaney.
To follow up, and I appreciate the opportunity, Mr. Chairman. When we left off, Mr. Greenberg, we're talking about 2 or 3 things that y'all have done to try and encourage new entry, and I don't think we finished that conversation. So can you name 2 or 3 things you've done in the last, I don't know, 2 or 3 years to try and encourage more entry into this space?
Well, as I mentioned, we reduced the monitoring period from 7 to 3 years for de novos. We are holding meetings in regions around the country with interested industry and organizing groups to inform them about the application process. We are going to be releasing before the end of this year, and I owe the chairman a report on a date on this, a handbook laying out essentially a guidebook for applicants interested in accessing deposit insurance. We've issued guidance in a couple of instances trying to clarify the application process itself.
Okay.
And we've worked with the state and federal regulators responsible for chartering institutions, because deposit insurance has to go with the charter as well. So we need to work together if we're going to make the process.
I appreciate that, and don't want to and won't diminish that. Yeah. But I'm looking at the appendix from your testimony, and it seems like that we could be doing more, because it doesn't seem to be working. That the numbers seem to be there have been 49 total applications received since 2009, and only 3 have been approved. I'm not real good on math, but that's really close to like 6% approval. What does return mean in your world, Mr. Greenberg, on an application? If application is returned, what does that, that's not an approval, right?
No, it's generally when an applicant is unable to satisfy all the application requirements.
And then a withdrawal would be similar to a return, or what's
when the applicant itself chooses to withdraw the application.
Okay, so return is a closest thing to a rejection that you guys do, then, I guess, is what it comes down to.
In order to make a decision on
and it's not that big a deal because you haven't done one since 2010, so I'm just trying to get the nomenclature right.
And this is, as you can see from the chart, from the appendix, both of these things occurred in the early part of the decade.
Correct.
As well.
Okay, and there are 2 pending, apparently. Mm-hmm. Okay.
Well, will the gentleman yield?
Absolutely. To the chairman, I've learned that that's usually a good practice.
How many have you rejected?
Well, I think the way to be...
If return equals rejection.
I
don't think it does.
I think with the general experience is that when an application is going to be rejected, we give the applicant an opportunity to withdraw the application, because as a general matter, they prefer that than a formal rejection, which could have some consequence for them, and we try to give them that accommodation as part of the process.
But a rejection would have a consequence for you, too.
Yeah, and look, Congressman, I think as we talked about in terms of reviewing the process here, I take your point on that, and I think that's something we could look at.
Thank the chairman. Dr. Johnson, thank you. It's good to see you again. Let's talk about barriers to entry and talk about new capital formation. It's healthy, right? You and I would agree. You and I typically disagree on a lot of things, but we'd agree that new entrance into this space is a good thing. I think you said that earlier. So in your mind, what could we be doing? If you and I both agree on an end goal, we might disagree on how to get there, but what are some of your ideas on how to encourage new entrants into this market?
So I think we completely agree on this point, Mr. Mulvaney. Just to be clear, though, on the data, you made a very important point at the beginning. You said it's a highly profitable industry. We should expect a lot of entry. That's totally correct. But as we were discussing earlier, the profitability of de novo banks is rather low as an unfortunate, you could say, side effect of the very low federal funds rate and the low 10-year Treasury rate.
Yes.
Now, as interest rates go up,
let me cut you off there, and I'm sorry to do that, but I get to do that because I'm on this side of the aisle, right? I apologize. But you said something else, which is regarding economies of scale, and one of the reasons that the small banks can't be as profitable is because they don't have the economies of scale, and this is, you mentioned specifically technology. Would you agree with me, sir, that there's an economy of scale when it comes to compliance, and that it's easier for the big banks to meet the compliance regulations and requirements than it is a small bank?
Absolutely. And I think a lot of the discussion here and a lot of the suggestions you're making to the FDIC are completely appropriate. I think we should be asking, are there compliance requirements that are unfair, unreasonable, out of proportion to the risks that are posed. I think that's an entirely reasonable question. The only point I was trying to make was there are other factors which, according to the research, are very important in the current situation. So don't be too hard on them given the interest rate environment. But as interest rates come back up, we should, to your point, Mr. Mulvaney, exactly expect more entry into this sector. And to also support you, Mr. Mulvaney, if we look at fintech, so other kinds of financial services where it's not generally funded by an insured bank, right? That's a typical characteristic of fintech. We see a lot of entry into that sector. We see a lot of risk capital. We see a lot of people wanting to provide loans to, particularly away from mortgages, to consumers in different ways. So that's
capital is trying to find a way into this space.
Exactly. So there are impediments in this sector, no doubt. The impediments are about the structure of banking. The impediments are about the nature of the economies of scale and potentially also the compliance. Fintech, is an end run around some compliance. Maybe that's appropriate. Maybe we should have some concerns about it, separate discussion. But I think we're agreeing, Mr. Mulvaney, more than anything else here.
And I think it's rare, so I'm enjoying it while it's lasting. I guess my primary point is this, is that if we boil it down to just 3 barriers to entry, and we know that's not the case, but if the 3 that we've talked about today were the low interest rate environment, the high regulatory burden, and the technology component, there's really only one that anybody at that table can do anything about, and it's Mr. Greenberg, and he could help lower the regulatory burden. We can't, technology is market-driven, and the Fed has more to do. As much as I'd like to think we had more influence over them than we do, we don't. So we don't have much influence over the interest rate environment, but we do have influence over the regulatory burden to new entry into this marketplace, and I'm hopeful that maybe as a result of this hearing, we can try and do something about that. I thank the chairman for the opportunity.
I thank the gentleman. As we conclude here, you can see people filing in for the next hearing, which starts in 7 minutes. This has been very productive. I appreciate all the participants. Mr. Grunberg, for both the ILCs and the community banks, can we, by the end of the month, can you give us a good listing of what you're going to be working on to provide for this committee? Is that fair?
Yes, sir. I think we can do that.
That would be great. And then Mr. Meadows was pretty generous in saying 120 days, but I think we have several of those items, including Dodd-Frank and others, that we would like to see. So if you can provide it to us by the end of the month, that would be most helpful. I appreciate it. Thank you all for your participation. It's an important segment, important to our economy, and affects more Americans than most people realize. And we thank you all for your participation. The committee stands adjourned.
All right, thank you.
The Subcommittee on Information Technology and the Subcommittee on National Security will come to order, and without objection, the Chair is authorized to declare recess at any time. We expect to be interrupted by a vote series later this afternoon, and because of that, we're going to be abbreviated in some of our opening statements. I appreciate y'all being here today. Cybersecurity isn't a buzzword anymore, it's real, and y'all's written statements were helpful in helping me better understand this issue. And if we're able to get a whole of government talking about this and making sure that we're all singing off the same page, I think we're going to be safer as a nation. And I appreciate such a distinguished group of folks joining us here today. And with that, I'm going to yield to Mr. Lynch for his opening remarks.
Thank you, Mr. Chairman. I'd like to thank Chairman DeSantis as well and all the members of the subcommittee on both sides of the aisle. This is an incredibly important topic, and I appreciate the all-star panel we have here today to help us with our work. I understand that certain questions that might be raised today in this forum are best left for a more secure setting, if we're going to get into any detail. And so we know that at the outset. To this end, I appreciate the willingness of our administration witnesses to conduct a classified briefing for committee members at a date to be yet determined. So thank you. As underscored by National Intelligence Director James Clapper in his most recent worldwide threat assessment of the U.S. intelligence community, continuous innovation in cyber information technology has been accompanied by the emergency of new and complex national security threats. According to Director Clapper, and this is a quote, "Devices designed and fielded with minimal security requirements and testing and an ever-increasing complexity of networks could lead to widespread vulnerabilities in the civilian infrastructures and the U.S. government systems. These lapses in cybersecurity are highly susceptible to exploitation by a range of threat sources, including foreign governments such as Russia, China, North Korea, and Iran, who are motivated by cyber espionage. There's also the threat of cyber terrorism perpetrated by terrorist groups designed to promote online recruitment, propaganda, and financing activity, and cite lone wolf attacks. The Site Intelligence Group reports that the Islamic State actually maintains its own so-called hacking division, or United Cyber Caliphate, a group of prominent hackers that has already published several kill lists of U.S. military personnel online. Moreover, hackers have repeatedly targeted the U.S. commercial sector for illegal monetary gain and money laundering. The continuous onslaught of massive data breaches in the public and private sectors here in the United States and worldwide evidences the complexity, diversity, and far-reaching implications of these cyber attacks. Our national security and cybersecurity framework must be equipped to prevent and mitigate against public sector attacks such as the critical breaches of information technology systems at the Office of Personnel Management back in 2015. These cyber attacks did not only compromise the personal identifiable information of over 22 million individuals, including their Social Security numbers, rather, as noted by the FBI Director James Comey, they also yielded a treasure trove of information about everybody who has worked for, tried to work for, or works for the United States government, close quote. The past 2 years have also witnessed breaches of computer systems at the State Department, the White House, the Internal Revenue Service, and the United States Postal Service, as well as reported leaking of sensitive information pertaining to employees at the Department of Homeland Security and the FBI. At the same time, our cybersecurity defenses must be able to deter and respond to threats targeting private sector companies motivated by illicit financial gain. It's my understanding that the Federal Reserve is currently leading other U.S. regulators in developing baseline security safeguards for U.S. banks in the wake of a February 2016 attack in which cyber criminals successfully transferred $81 million out of the Bangladesh Central Bank to a casino in the Philippines. We've also witnessed the infiltration of computer networks at J.P. Morgan Chase that compromised the account information of 83 million households and businesses. A $62 million breach at Home Depot that compromised an estimated 56 million payment cards, and multiple cyber attacks against the Target retail chain that resulted in the theft of approximately 40 million credit and debit card numbers and the personal information of up to 70 million customers. Clearly, the national security threat posed by cyber attacks is multifaceted and demands the continual development of cybersecurity policies and countermeasures that are adaptable, modernized, and comprehensive. I look forward to discussing with our witnesses at today's hearing what steps we are taking in this regard. Thank you, Mr. Chairman, and I yield back.
I'd like to thank the ranking member of the Subcommittee on National Security for his opening statement. And now I'd like to recognize my friend from the state of Florida, the chairman of the Subcommittee on National Security, Mr. DeSantis, for his opening remarks.
Thank you, Mr. Chairman. Thank the witnesses. I'm not going to give a full statement in the interest of time. I'd like to hear from the witnesses and get as much done until we have votes, but I will say that this is a very, very important part of our national security challenges and strategy, and it's only going to continue to be something that's more prevalent. So I appreciate the chairman calling the hearing, and I look forward to hearing from the witnesses, and I yield back.
You know, one of the areas we all talk about when it comes to national security strategy is the 4 levers of national security: diplomatic, intelligence, military, and economic. And one of the reasons we composed this panel this way is because of that. And we have DOD here, State Department, thank you, Mr. Canuck and General Alexander, your previous time in the intelligence community, and now also representing the commercial sector as well. And Mr. Singer, your work in this effort. So I think it's going to be a great conversation, and it is something important that we need to do. And we recognize that the intent is to not get into classified information here, but I think General Alexander said it best in his written statement that without much public discussion, I'm reading from his words, of our basic cyber capabilities, particularly on our offense, we face 2 major challenges. It's difficult to have a reasoned discussion of how we might respond, at least in the cyber domain, and it is that much harder to deter offensive actions by others. So I think having a public discourse is important in the larger strategy. And what we will do is we're going to recognize General Alexander for your opening remarks, and then we'll have Ranking Member Kelly deliver hers. General Alexander. Oh, actually, we got to sign. Have everybody. We've got to raise the right hand. Yeah. Actually, before we begin, we want to hold the record open for 5 days for members who would like to submit a written statement. And now I'd like to recognize our witnesses. I'm pleased to welcome Mr. Aaron Hughes, Deputy Assistant Secretary for Cyber Policy at the U.S. Department of Defense, Mr. Chris Painter, Coordinator for Cyber Issues at the U.S. Department of State, had a long, illustrious career in Department of Justice as well, and White House, NSC, you name it. General Keith Alexander, retired CEO and President. He's retired General, but now CEO and President of IronNet Cybersecurity, a former head of the NSA, ran Cybercom as well. Mr. Sean Canuck, Counsel at Legal and Strategic Consulting Services and former National Intelligence Officer for Cyber. And Mr. Peter Warren Singer, Strategist and Senior Fellow at New America. Welcome to you all, and pursuant to committee rules, all witnesses will be sworn in before they testify. So please rise and raise your right hand. Do you solemnly swear or affirm the testimony you are about to give will be the truth, the whole truth, and nothing but the truth? Thank you. Please be seated. And let the record reflect that all witnesses answered in the affirmative. And in order to allow time for discussion, please limit your testimony to 5 minutes, and your entire written statement will be made as part of the record. General Alexander, you're up first. You're now recognized for 5 minutes.
Mr. Chairman, distinguished members of the committee, Mr. Chairman, Mr. Vice Chairman, Mr. Vice Chair, it's an honor and privilege to be here before this committee. I think what you're taking on is vital for our country. And it's also an honor and privilege to be here with my esteemed colleagues from the past. Aaron, I think we've all been together, and Peter and I were on a committee just a few months back. So it's an honor to be here. I'm going to hit mine rather quick. I recognize the classification issues that you raised, Congressman. I know that it's important that we don't raise those in public, but I do think we have to have a debate. I'm not proposing any red lines anywhere. I'm proposing that we start the debate in an informed way where you, Congress, the administration, the American people can engage in how we're going to work in cybersecurity. There's been a lot of effort in that area with what my colleagues, Chris and others have done, but I think we have to go further. I'm going to briefly hit the top issues that I see that our government and our country needs to take on, especially when you look at what NATO is doing, now recognizing cyber is a domain of warfare. We need to be out in front. And it reminds me, when Chris was in the Department of Justice back in the 60s, he worked with McNamara. And if you think about McNamara's approach on the nuclear deterrence, can we come up with a strategy for cyber that's equal to that? Congressman Lynch pointed out some great issues that we see every day in cyber, from Home Depot to Target to everything that's going on. Companies are being hammered. We've passed legislation recently that helps the companies, commerce, and government work together. It's a step in the right direction, but much more needs to be done. Look at the change in technology, what's going on today, how rapidly this is changing. And if you look at the projections for the Internet of Things by 2020, there'll be 4 to 10 times as many devices on the Internet as there are people on the planet. This is a huge capability and a huge problem. Now when we look at, so what are we going to do about it, think about the threats that Mr. Lynch pointed out. Criminal activities in cyberspace are growing and continue to grow. This year will be, the biggest growth will be in ransomware. I think we're going to see that come out, and this is going to be huge for our companies out there, especially the small and mid-size, who can't afford world-class capabilities. And so it really gets us to a point where we've had in other committee hearings, so what do we do? How does government and industry work together? What's the role of government? What's the role of industry? And how do we share? I'm not going to give you you have to do it this way or this way, but I do think from where you sit in this institution to help start that discussion and create what you think from a congressional oversight you believe needs to be done. Some thoughts on that as we move forward. Who's responsible for defending the nation when we come under attack? If you think about Sony being attacked, Sony has no capability to fire back. In fact, if we think about Sony firing back, we quickly get to the realization that if Sony fires back, that could get us into a war on the Korean Peninsula. We don't want that to happen. That's an inherently government responsibility. If it's a government responsibility, that means government needs to be able to fire back when appropriate, when the administration, the President, and the Secretary determine. We can't see what's happening. The government can't see what's happening to Sony in time to do that. So the first thing is bridging that gap of sharing information between government and industry so that government can do its first job in defending our country. We've got to start that debate. It's been hampered by Snowden and others, but it's something that I think it's important for you and the rest of the administration to take on with our country and with our allies. Second, if we get to a point where our country comes up with the right framework, what would we want to push NATO to set as theirs? And our country developed the Internet. We're the ones who started this. We ought to lead in securing it and coming up with the McNamara approach for how we're going to defend and deter in the same space. And so what I really think we need to do is start that discussion.
without any preconceived notions about where it will take us, but put the best minds in there and say, here's what we want to do. We want to stop these types of attacks on our industry. We want to ensure that our allies have the same sense and purpose, especially where we have alliances, and that we're all in agreement. And so from my perspective, Mr. Chairman, I'm glad that you've taken this on. I see I'm out of time, so I'll cease work there, and thank you very much.
Thank you, General Alexander. Now it's always a pleasure to introduce my friend and colleague from the great state of Illinois, Ms. Robin Kelly, the ranking member of the Subcommittee on IT.
Thank you, my friend. I'd like to thank Chairman Hurd and Chairman DeSantis for calling this hearing so that the committee and the American people can get a better understanding of when a cyber attack should be considered an act of war and how the United States might respond when that happens. The cyber threats facing the United States are increasing in severity, opening the nation to the possibility of extremely damaging cyber strikes that could potentially threaten the U.S. economy and endanger American lives. General Alexander, in your 2014 testimony before the Senate Committee on Armed Services, you warned, and I quote, "Those attacks are coming, and I think those are near term, and we're not ready for them." In fact, we are already seeing the first salvos of digital attacks reaching beyond the cyber realm. In March of this year, seven members of Iran's Revolutionary Guards Corps hacked into the control system of the Bowman Avenue Dam in Rye Brook, New York. In response to the compromise of the dam cyber network, Paul Rosenberg, the village mayor, said, and I quote, "It's ridiculous how little that dam is, how insignificant in the grand scheme of things. We're not talking about something vital to the infrastructure of the country." While May's attack may not have targeted the nation's vital critical infrastructure, it is almost certain that future attacks will. And when that does happen, how do we react? Do we hack the hackers, or do we respond with physical force? This isn't the first time Congress and the intelligence community has tried to answer that question. It is important that we recognize that the global nature of the Internet requires the U.S. to establish solid partnerships throughout the international community so that every nation understands that there are consequences for unacceptable cyber behavior. The problem is that by laying out in a public forum what constitutes unacceptable, we open the possibility that our adversaries know where the tripwires lie across which they can't step. That's why I'm pleased the Chairman has arranged for committee members to receive a classified briefing to better understand where that line is and how we respond when our enemies cross that line. And again, I'd like to thank the Chairman for calling this hearing and our witnesses for being here today.
Thank you, Ms. Kelly. Now we'll go to Mr. Hughes for your 5 minutes of opening statements.
Thank you, Chairman Hurd and DeSantis, ranking members Kelly and Lynch, and members of the subcommittees. I'm pleased to testify today on the Department of Defense's strategy as it relates to cyberspace and how the department approaches cyber incidents. It is an honor to be here, and I'm proud of the progress we have made in this challenging domain. Since DoD's cyber strategy was signed in April of 2015, the department has devoted considerable resources to implementing the goals and objectives outlined within the document. When Secretary Carter signed the strategy, he directed the department to focus its efforts on 3 primary missions in cyberspace. First, to defend DoD networks, systems, and information to assure DoD missions. Second, to defend the United States against cyber attacks of significant consequence, and to provide integrated cyber capabilities in support of military operations and contingency plans. Another key aspect of our strategy is deterrence. DoD is supporting a comprehensive whole-of-government cyber deterrence strategy to deter attacks on U.S. interests. This strategy depends on the totality of U.S. actions to include declaratory policy, overall defensive posture, effective response options, indications and warning capabilities, and the resilience of U.S. networks and systems. That said, incidents described as cyber attacks or computer network attacks are not necessarily armed attacks for the purposes of triggering a nation-state's inherent right of self-defense. When determining whether a cyber incident constitutes an armed attack, the U.S. government considers a broad range of factors, including the nature and extent of injury or death to persons and the destruction of or damage to property. As such, cyber incidents are assessed on a case-by-case basis and we would use a whole-of-government approach in responding to and deterring future malicious activities in cyberspace. The fact of the matter is that we face diverse and persistent threats in cyberspace from state and non-state actors that cannot be defeated through the efforts of any single organization. Our increasingly wired and interconnected world has brought prosperity and economic gain to the United States, while our dependence on these systems have left us vulnerable to the evolving threats posed by malicious cyber activity. While DoD maintains and uses robust and unique cyber capabilities to defend our networks and the nation, that alone is not sufficient. Securing our systems and networks is everyone's responsibility and requires close collaboration with other federal departments, our allies and partners internationally, and the private sector to improve our nation's cybersecurity posture and to ensure that DoD has the ability to operate in any environment at any time. The Department is committed to enhancing the resilience of our networks and systems and defending the U.S. homeland and U.S. interests from attacks of significant consequence that may occur in cyberspace. And I look forward to working with these committees and the Congress to ensure that DoD has the necessary capabilities to carry out our roles and missions in cyberspace and to keep our country safe. I thank you for the support in these efforts, and I look forward to your questions this afternoon. Thank you.
Thank you, Mr. Hughes. Ms. Painter, you're now recognized for 5 minutes.
Thank you. Chairman Hurd and DeSantis, Ranking Member Kelly and Lynch, members of the Subcommittee for Information Technology and National Security, thank you for the opportunity to speak to you today. I will discuss the framework for stability in cyberspace that the State Department in particular is working to promote internationally, but with our partners. I will also cover some of the other topics that were raised in your invitation. The Department of State, working with our interagency partners, is guided by the President's 2011 International Strategy for Cyberspace, which sets out a strategic framework of international cyber stability designed to achieve and maintain a peaceful cyberspace environment where all states are able to fully realize its benefits, where the advantages to cooperating against common threats and avoiding conflict, where there are advantages, and where there is little incentive for states to engage in disruptive behavior or to attack one another. This framework has 3 key elements. First, the affirmation that existing international law applies to state behavior in cyberspace. Second, the development of an international consensus and promotion of additional voluntary norms of responsible state behavior in cyberspace that apply during peacetime. And third, the development and implementation of practical confidence-building measures, or CBMs, among states. Although many of the elements of this framework may seem self-evident to a U.S. audience, especially a sophisticated one, cyber issues are still new to many states, and there are also states that hold alternative views of how to promote cyber stability. Notwithstanding these headwinds, as well as the fact that diplomatic negotiations on other issues can take many years, if not decades, the United States and its partners have made substantial and really big progress in recent years toward advancing our strategic framework for international cyber stability. Since 2009, the United Nations Group of Governmental Experts on International Security Issues in Cyberspace, or the UNGGE, has served as a productive and groundbreaking expert-level venue for the United States to build support for this framework through 3 consensus reports in 2010, 2013, and 2015. I should emphasize the U.S. has been the leader here. The conclusions captured in those reports have in turn been endorsed by political leaders in a range of settings, including most recently at the G20 Leaders Summit in Turkey. Given the title of this hearing, Digital Acts of War, I would like to discuss how the U.S. government thinks about these issues, which is consistent with its broader approach to promoting stability in cyberspace through the prism of existing international law. As an initial matter, the United States has been clear that it believes that cyber activities may, in certain circumstances, constitute an armed attack that triggers our inherent right to self-defense as recognized by Article 51 of the UN Charter. The United States has described publicly how it would evaluate whether a cyber activity constitutes an armed attack under international law. Of primary importance to such a determination are the actual or anticipated effects of a particular incident. When determining whether a cyber activity constitutes an armed attack sufficient to trigger a state's inherent right to self-defense, the U.S. government believes that states should consider the nature and extent of the injury or death to persons and the destruction of or damage to property, an effects-based test. It is worth emphasizing that this is a case-by-case, fact-specific inquiry, whether the events in question occur in cyberspace or elsewhere. As a general matter, states have not sought to define precisely or state conclusively what situations would constitute armed attacks in other domains, and there is no reason cyberspace should be different. In fact, strategic ambiguity could very well deter most states from getting close to the threshold of an armed attack. Finally, I would hasten to note that regardless of whether a particular incident rises to the level of an armed attack, we have a range of options for responding. The U.S. government uses a whole-of-government approach to responding to and deterring malicious activities in cyberspace that brings to bear its full range of instruments of national power and corresponding policy tools: diplomatic, law enforcement, economic, military, and intelligence as appropriate and consistent with applicable law in particular cases. As suggested in the invitation for this hearing, public attribution is one such option. In cases where actors responsible for a particular incident have been determined, the U.S. government will consider whether to identify those actors publicly when we believe it will further our national interests, including our ability to hold those actors accountable. However, the U.S. government will also maintain flexibility to avail itself of the full suite of options that we have. In closing, I would like to thank the two subcommittees for giving me an opportunity to speak on such a relevant and timely set of issues. Despite the threats we face in cyberspace, I know that we were all committed to maintaining and promoting an open, interoperable, secure, and reliable Internet in the face of these threats that we can all continue to benefit from. On a personal note, I've been involved in these issues, as the Chairman has mentioned, for the last 24 years now, almost 25. And I'm very pleased to see that they are getting the attention as a policy priority both within the U.S. and around the world. And I certainly think we've made a lot of progress in having the kind of conversation that was discussed earlier, and I look forward to your questions.
Thank you, Mr. Painter. Mr. Canuck, you're now recognized for 5 minutes.
Thank you very much, Chairman Hurd, Chairman DeSantis, Ranking Member Lynch, Ranking Member Kelly, and distinguished members of Congress. It is indeed a pleasure to be here and contribute to this important discussion. Having looked at it as an academic, as a professional international attorney, and as the National Intelligence Officer for 5 years until last May, I come with a genuinely strategic and analytic approach. I have not been involved in policy formulation directly in the past. And I concur with my colleagues about the importance of this topic, and after 15, 20 years of my own experience, I too am excited to see the public and congressional attention being paid to this important issue. I will offer, however, that as a nation, we still lack both a strategic approach to this problem and a practical, effective set of solutions to deter malicious and adversarial behavior in cyberspace. And that itself is illustrated by the myriad cyber attacks we read about each year that are perpetrated by a range of state and non-state actors. In my written testimony, I addressed several of the questions that my colleagues have also mentioned, so let me very briefly say that I concur with Mr. Hughes and Mr. Painter that digital acts of war will be judged through an effects-based analysis. In my academic work since 1996, I've held that position, and I do agree with the U.S. government representatives here today that that is the correct approach. Regarding the issue of attribution challenges, I will note in my analytic work for the intelligence community, we looked at two considerations. We looked at the technical or forensic aspects, network investigations, malicious software, reverse engineering, and other digital footprints, in addition to what I termed analytic attribution, where you looked at the geopolitical context within which malicious cyber events happened. In many cases, the context, the identity of the target, and how the information that was stolen, compromised, or made unavailable is used or leveraged can oftentimes tell you about the motivation and possibly the actor. That's from the analytic and technical attribution side. A completely distinct question is whether or not one would seek to do public attribution, and that is inherently a policy question for policymakers. It has three components, in my opinion. There's the question about the bilateral relationship with any entity you may accuse of an action. Cyber does not occur in its own stovepipe or domain. It's a part of a much larger international and bilateral relationships. Secondly, the decision of whether or not to compromise sources and methods of intelligence in order to prove evidentiary why that attribution assessment is being offered publicly. Obviously, there would be policy reasons to not disclose certain intelligence capabilities, especially in a context where those capabilities may be perishable and they may be the exact same platforms or accesses that one may use for a retaliatory capability. So it's almost a double negative potential
if you choose to publicly attribute in that context, because you don't have separate reconnaissance platforms in all cases and separate retaliatory platforms the way you would have had in a nuclear context, for example. Last of all, as I believe Ranking Member Kelly may have mentioned, the issue of credible threats and credible deterrence. If you are not prepared or capable of exacting satisfaction upon accusing or attributing an action to someone, what does that do for your global reputation and the import of any of your declaratory statements? Those three very important policy questions are very distinct from the technical attribution questions, but equally important from a policy perspective. I will also commend the U.S. diplomats who have had what I think are great successes in the UN Group of Governmental Experts, the G20, OSCE, and with particularly President Xi and the People's Republic of China. However, I am not personally convinced that diplomatic overtures directly translate into changes of behavior, particularly when Western countries like the United States continue to have fundamentally different objectives for international cybersecurity than certain other nations, such as Russia and China, and my written statement addresses some of that basal difference. I will also offer that I see a de facto norm today, which is do cyber operations, do them clandestinely, and try to get away with them, you might not be punished. And in fact, Director Clapper's testimony in 2016 read, "Many actors remain undeterred from conducting reconnaissance, espionage, and even attacks in cyberspace because of the relatively low costs of entry, the perceived payoff, and the lack of significant consequences." My time is concluded, so I will leave that there for now. Thank you very much, and once again, thank you for the invitation to participate.
Thank you, Mr. Canuck. Mr. Singer, you're now recognized for 5 minutes.
Mr. Chairman, ranking members, and members of the subcommittee, it's an honor to speak at this important discussion today designed to reboot the cybersecurity conversation. This shift is direly needed as there is perhaps no national security problem more 21st century in its definition and form than cybersecurity, and yet to solve it, too much of our discussion and strategy remains rooted in 20th century frameworks that don't well apply. I've submitted written testimony that breaks down the issue and what we can do about it. It focuses on the debate over digital acts of war and explains in detail how there are 7 key differences with the Cold War that make framing this problem in the old modes not ideal. It then provides a suggested new legislative strategy to face our challenge, breaking it down into key areas I'll focus on today. Notably, the strategy is nonpartisan, realistic in its implementation possibilities, and doesn't involve any massive increase in budget. The first key part of the strategy is deter through diversity. This includes improving our offensive cyber capability, but importantly, understanding that cyber weapons are not like WMD. They are tools of constant use in everything from espionage to ongoing operations against ISIS. Our real challenge here is more in integrating emerging cyber capabilities with our other conventional capabilities through improving training, doctrine building, resolving command and control questions. But as we face an array of attacks and attackers, a military offensive cyber response is not the only tool that we have to change their calculations. For instance, to respond to IP theft, it makes no sense to limit ourselves to retaliation with the exact same action in the same domain. We can also go after other assets that are valued by the attacker in other realms, and even those valued by influential third-party actors, such as sanctioning companies benefiting from stolen fruit. Indictments of individuals involved in hacking have value not so much in actual direct judicial punishment, but as a different means for surfacing data about attribution. Creativity and flexibility will beat simplicity in this dynamic. Indeed, we may even steal ideas from one attacker's playbook and apply them against another as a deterrence tool. From Snowden to Sony, data dumps have been among our most vexing cybersecurity incidents, but they have not threatened our core national interests. By contrast, threatening to reveal the private financial data of an authoritarian regime's leader, his family, or allied oligarchs may be far more potent than a counter cyber strike. We can sometimes see what regimes fear most by what they ban discussion of. The second and arguably most important part of the strategy is deterrence by denial, making attacks less likely to cause harm and thus less likely to happen. The magic word of resilience is that it works against any kind of attacker and attack, and is perhaps where Congress and this committee can have the most impact. The areas that call out for action cover the spectrum. On the military side, we have spent over $2 billion on construction alone at Fort Meade, and yet the Pentagon's own weapons tester found, quote, significant vulnerabilities, end quote, in nearly every major weapons system program that would be exploited in any actual war. In the executive branch, the White House has issued a post-OPM cybersecurity strategy that describes best practices every federal agency needs to put into place. Ensuring their actual implementation at every federal government agency and encouraging their spread to the state and local level could be one of the most important things that Congress does on cybersecurity. In relation to the business and public, sometimes government can be a trusted information provider, and sometimes it must go further to help shape individual and market incentives, as it has in realms that range from public health to transportation. The government should not merely support research on basic standards of internet security, such as the laudable NIST process, but now work to ensure their use. It can do so by efforts to spur the nascent cybersecurity insurance market that both protects business and incentivizes them to find and maintain best practices. True cybersecurity resilience is not just about computer and legal code, it's also about people, and we have a huge people gap here. The administration has a new cybersecurity human resources strategy, but it needs to, one, be overseen to ensure actual implementation, particularly across administrations, and two, it will fail if it only puts new people in old organizational boxes. We also have to find ways to tap talent outside of government. Take the Pentagon's recent one-month experiment with bug bounties. It saved millions of dollars, yielded 1,100 reports on how to protect our systems before the bad guys could attack them, and it talent scouted across the U.S. One of the hackers working for us was an 18-year-old who did it in his spare time while taking his AP exams. Yet there is not a parallel at other federal agencies, nor at our state and local partners. Or consider that we have retasked a number of National Guard units to become cyber warriors, but there is a wealth of talent that is either unwilling or unable to meet the legal and physical obligations that come with joining the U.S. military. Here I would point to Estonia's Cyber Defense League as a model to draw on. Think of it as the cybersecurity equivalent to the Civil Air Patrol, creating a mechanism for citizens to volunteer their expertise for cybersecurity to aid for free in everything from red teaming to serving as rapid response teams to cyber attack. They've helped Estonia become one of the most cyber resilient nations in the world. The third rail of the strategy I won't hit, which is norms. It's in the submission. I think it's been covered well here. I would end just simply by saying we can either approach this topic with a new strategy that faces our new needs, or we can continue to talk tough and simple and be victims. Thank you.
Thank you, Mr. Singer. Now I'd like to recognize Mr. DeSantis for 5 minutes of questioning.
Thank you, Mr. Chairman. General Alexander, how do you view the distinction, if you think there's one, between the threat from state-sanctioned cyber attacks versus non-state actors who are trying to attack us in cyberspace?
I would not make a distinction based on the impact to our nation. And I think that's an extremely important question you bring out, because it really says what's the role of government in protecting this country. And it doesn't matter who takes down the financial sector, the energy sector, the healthcare sector. If it goes down, that's critical to our nation. So the consequence and the approach and our strategy has to discuss both. We learned that in 9/11. While there may not be direct ties to this or direct linkage back, I think that's the approach that we should take. Look at what the impact of the nation would be.
And I agree with that in terms of trying to prevent that. How, though, if there is a successful attack, how do you then respond when, if there are in fact non-state actors who are responsible? After 9/11, I think it's actually a good framework to think about it. The policy was, look, if you're a state actor, you may not have committed the attack, but if you're harboring terrorists who are doing it, we're going to hold you liable. Does that same framework, will that work in cyberspace? Because it would seem to be difficult that a government would be able to have a handle on everybody who's operating in cyberspace.
Right. So you've asked a great question in that, because it also gets you back to our strategy. And the strategy can't be, what are we going to do after an attack? It's really what you're hitting on is we can't afford to allow that kind of attack to occur. And so what it really does is it says we're going to shape our strategy on preventing, not on forensics. Now, forensics are important, and we do have to go through, but if everything is based on after-the-fact forensics, then you've already lost something, and what you're really getting to is We need a defensive strategy that stops that from happening. And I would take it one step further. You know, we look at the theft of intellectual property, the greatest transfer of wealth in history. That's taking our future away from us. How do we defend against that? And I believe that's where government and industry need to work together. I like Peter's approach about working together with industry. We need to make a more secure cyberspace. And all the roles that we can put in with state, with DOD, but it has to be a linkage to the commercial side. They own the vast majority of the networks.
Mr. Canuck, you talked about how people in cyberspace could be doing espionage, typical things that governments do. They can also be doing it, which would be considered more of an attack along the lines of an act of war. So the fact that, so do we have the forensic ability to determine whether a particular measure was meant or compromise was an attack versus a form of espionage, and how does that impact our ability to calibrate our response?
In response to particular incidents, they are usually ad hoc investigations dealing with the particular circumstances. It is very difficult to divine the intentions of would-be adversaries or actors in specific instances. Often you might derive that information from other sources of information, intelligence collection, other areas, to know what actors' objectives may have been. Simply looking from the forensic data, if you are able to see what was exfiltrated and where it went and how it was later used, that may give you a sense of the objectives. I will simply offer that in the real-time context of an ongoing incident, where you would want to be responding in a policy or military sense in real time, that will be a very high challenge for real-time attribution and to motivation as well. If you are permitting policy responses days, weeks, months later, when you do have a higher degree of attribution, that may be possible, but it is not a certainty that you always know who did it and why.
Great. Mr. Singer, we're hearing more about non-state actors, terrorist groups, criminal groups using sophisticated toolkits to launch cyber attacks. So first of all, are sophisticated cyber capabilities finding their way to less sophisticated actors? Are we seeing evidence of that?
Yes, they are. They proliferate. However, I think we still need to recognize that states are the big dog in this, both because of their higher technical capability. So there's, for example, ISIS was mentioned, lethal group in lots of different ways, but their cyber capability pales compared to a China or a Russia. The second is the scale that a state can bring to the problem. So it's not just sophistication, it's the ability to mobilize thousands, tens of thousands, or hundreds of thousands of people in the community if you are carrying out an attack. States are a fundamentally different challenge here than non-state actors. Fortunately, on the good side, states have interests, and so they can be deterred in a different way that many non-state actors can't, so we shouldn't bundle them together.
Thanks. My time has expired, and I yield back.
General Alexander, do you want to answer that?
Yeah, Mr. Chairman, I would recommend, based on what Chairman DeSantis brought up, that the committee might consider getting a briefing or a demonstration of the dark web. It answers the question that you were just asking: what's available for hackers out there? What do they do to buy it, and how are they getting their materials? And there are companies that have some of these demonstrations that I think you would find extremely informative on just that question. How is it proliferating?
Thank you, General. And we're going to recognize Ms. Kelly for her 5 minutes of questions, and then we'll go into recess for votes.
Thank you, Mr. Chair. Mr. Singer, in a December 2015 article for Foreign Policy Magazine's website, you said that government strategies for responding to cyber threats is based on assumptions and plans made for the Cold War threats that are 30, 40, 50 years old. Is that accurate?
Yes.
Yes. Okay. Deputy Assistant Secretary Hughes, during the Cold War, our strategy of mutually assured destruction was based on the fact that we could tell instantly if the Soviets fired an intercontinental missile. Is that correct?
Yes.
Is it equally obvious to figure out where a cyber attack originates?
I think, as Mr. Canuck said, there's many factors that go into that attribution and determination. So I'd say it is probably not as instantaneous as it was during the Cold War.
And why do you think that is? Just because there are so many factors, or do you feel like
Number of factors, there's number of actors. diverse operators out on the internet makes it extremely difficult.
Okay, thank you. Mr. Singer, unlike during the Cold War, you said when considering responses to a cyber attack, and I quote, the defender's best move may well not be to strike back as rapidly as possible, but to show no outside awareness of the ongoing attack. Deputy Assistant Secretary Hughes, why might the U.S. choose not to respond to a cyber attack?
I mean, I think it goes to a point that my colleague, Mr. Painter, made in terms of what our response might be. I think there's a number of factors from foreign policy implications and the like that we want to make a determination on response on a case-by-case basis.
So the main question of this hearing is, when do we strike back against an adversary for a malicious cyber attack? Taking it one step further, when do we respond with not just a cyber attack of our own, but possibly missiles and tanks? Mr. Singer, you said that we need to think differently about our response to cyber attacks, and I was trying to write down everything you said. You talked about deter through diversity, sanctions, indictments, being creative and flexible, maybe revealing finances of our enemy, and any other strategies you want to add. You talked about HR and talents to bring aboard.
There's a whole series of things, but I think the key here is to recognize when we're talking about the attacks, there is a wide array of them. So the attack on us might be anything from intellectual property theft to espionage, stealing of a state secret, to our feared scenario of something that causes mass loss of life. The first two traditionally have not been defined as acts of war. The third may meet that definition. And then in no way, shape, or form would we want to limit ourselves to a merely cyber response to it. We would want to have all the tools there. The other issue of here is the timing. Part of why you may choose to delay your response is not just the normative questions, it's to complicate the attacker's job. If you know that they're inside your system, you can then observe them, steer them into areas where they can't cause harm. The bottom line here is that we're going to need a very creative and diverse strategy, and the old kind of Cold War model of, whacking back if they hack us just won't be successful. It won't deliver actual cyber security.
Thank you. Mr. Hughes and Mr. Painter, how do you respond?
I'd say a couple things. First of all, and this also goes to Chairman DeSantis' question, we do have a range of tools in our toolkit. So yes, hacking or using cyber offensive operations could be one. Using kinetic operations may be another, depending on what the incidence is. We've said in our international strategy in cyberspace back in 2011, we have the full range of tools we'll use if the incident is significant enough, including diplomatic, including economic, including cyber tools, including kinetic tools in appropriate circumstances. We'll try to exhaust the law enforcement and network security tools first. I also quite agree that part of this is, and I'd push back against the view that we are looking at this from a nuclear perspective or one that's from 50 years ago. I think one of the things we've been doing and spending a lot of time on is looking at this whole of government approach where we're really looking at new capabilities, new tools, making sure we're inculcating this throughout, not just our government, but NATO was mentioned, making sure that NATO has this as part of their strategic concept, making sure that other countries understand this and we have more of a collective defense. That's exactly what we're trying to do. And when you're talking about a criminal threat, I agree with General Alexander that it's not, you look at the effects are going to might be the same, but the tools you use to respond might be different. If it's a nation state, you have certain tools. If it's a criminal group, you might be using law enforcement investigatory tools.
Do you have anything much different? Because my time is running out. Is there anything else?
No, I think Chris hit it right on the head. There's a diverse way that we can respond, and we need to bring all those to bear for each event.
Thank you.
So votes have been called, so the chair is going to declare a recess until immediately following the last vote. The committees on information technology and national security will come to order again. For the record, General Alexander had to depart for a prior engagement. And now I would like to call on the ranking member of the National Security Subcommittee, Mr. Lynch, for his round of questions.
Thank you very much, Mr. Chairman. And again, I thank the witnesses. Mr. Singer, in your written testimony for today's hearing, one of the ways in which you indicate the United States could strengthen its cybersecurity protocols is through the continued development of international norms of conduct between nation states. And I think that's correct. But I do know that we have had a recent problem with the SWIFT network, which is an international banking network that is critical to our economy and especially to our international finance community. The difficulty there is that we've had evidence that there were several possible points of vulnerability, one being the Bangladeshi bank that was the principal bank, but also we've got cooperation by the Federal Reserve Bank of New York in forwarding $81 million to a Philippine casino, and so these people actually got away with this. This is $81 million through the SWIFT network that was actually achieved by the hackers. I know they tried to transfer about $1.8 billion. They got away with $81 million. Still, it's very concerning because of the importance of the SWIFT network. And I'm just wondering, if you go by the theory that we're only strong as our weakest link, there are some suspect practices in Bangladesh and in the Philippines that people think may have contributed to that hack. And in addition, I think there are a dozen banks that have been now identified and had contact with FireEye, which is the security firm that was involved at the Bangladesh Central Bank. So all of the banks are Southeastern banks, Southeast Asia. None of the banks, except for the Fed, and apparently they had the right codes and the right protocols from the Bangladesh Central Bank. But no banks in the United States, no banks in Western Europe. The implication could be that those banks in Southeast Asia did not have the firewalls, did not have the cybersecurity systems that the European banks and U.S. banks have. So how do we approach that? Especially, I mean, you could take an approach that people are not allowed to participate if they don't have a robust cybersecurity system in place. But that would put a lot of developing countries, Nigeria, perfect example, growing economy, that would shut a lot of people out from the international banking community. So it presents difficulties, but the size of these hacks, these breaches, is problematic. So we've got to do something. I was just wondering if you had any thoughts since you raised it in your written testimony.
I'd raise three things. First, I agree completely with you that the attack on the SWIFT system is significant to the U.S. Because of what it means, not just for us, but the global financial system. So the first issue is, at least from colleagues in that world, they are not yet satisfied that that the fixes that are needed to be made, that the assurance that these kind of breaches can't happen again, they haven't received it in sort of a third-party validated manner. The confidence in the system isn't there, so we need to focus on how do we restore confidence in the system that these fixes have been made. Second is the idea of norm building. Norm building is not just identifying what kind of attacks should or shouldn't be allowed to happen. It's also for us to figure figure out identifying sorts of targets that everyone can agree should be off limits. So, for example, this is an area of concord that we might have with a China, with a Russia and the like, that attacks on these kind of targets may not be militarily significant, but they harm us all. So the norm building is going to have to be, it's the difference with the Cold War, where any kind of target was allowed, but the attack didn't happen. Now we have lots of different attacks, but it's focusing on which targets are allowed. The third category is actually to link to a different incident, which we haven't talked about, but I think is crucial to norm building. Essentially, the failure of the U.S. and the international community to respond to the December hack of the Ukrainian power grid. This is the first proven takedown of this kind. It's the long discussed nightmare scenario. It's a violation of a widely agreed norm not to target civilian infrastructure with the intent to cause widespread and disproportionate damage. And yet, in the story of action and consequence, we had action. So far, we've had no consequence. So if we're talking about norm building, SWIFT is a great example, but the Ukraine one, I think, is even more important for us to wrestle with.
Yeah, that's great. I'm not sure if, Mr. Painter, you have anything you would like to add?
Yeah, if I could.
Or Mr. Kinnock or Mr. Hughes?
Look, I think the building, and part of the solution to this is the long-term norm building, and this is something we've undertaken, and frankly, as I said, we've led on. And the idea is, and there is this very high level of cyber war, which we don't see, and frankly don't see every day, but there is a lot of conduct we see below that level. And we made a lot of progress in a short time, and not only getting countries that are like-minded to agree, but also getting China and Russia, for instance, to agree. And the norms we've been promoting are, for instance, don't attack the critical infrastructure of another country absent wartime that provides services to the public. Don't attack CERTs, don't attack the emergency response, computer emergency response teams. Don't use them for bad, use them for defensive purposes. And an expectation that if you get a request from another state and there's malicious code coming or activity coming from that state, that you're going to mitigate it through technical or law enforcement means. And then finally, don't steal the intellectual property using cyber means of another country for your commercial benefit. And that's new, and we're promoting that, and that's some of the stuff we've been doing at the G20. If you look at literally every time the president has a meeting with a foreign leader, every single time, and the Nordic Summit is an example, the Modi visit just recently is another, you'll see a big statement on cyber, including these norms. That's a real priority.
Yeah, thank you.
I'd like to recognize Mr. Russell for 5 minutes.
Thank you, Mr. Chairman. And gentlemen, thank you for being here. It's been a really insightful discussion. And I guess on what was mentioned earlier by General Alexander, I believe, talking about the rise of ransomware and these Bitcoin hostage-taking of servers in businesses. We see it all the way down to small businesses as a preferred method. Too difficult to fight, not a big enough dollar amount to matter, and they're raking the public for millions of dollars. Could you speak to that a little bit? And then I've got another line that I'd like to discuss after that. Whoever would like to take that, or anyone that wants to comment on that.
I think one of the issues you point to is the magnitude of specific incidents. And during my work at ODNI, and certainly in some of Director Clapper's testimony in the past, he's talked about the cumulative effect of low to moderate level attacks that are already compromising U.S. economic competitiveness and national security. So I would simply draw attention to that. It's analytically recognized that the cumulative impact can be very significant even if individual events are not that large, and then that becomes a policy response or a legislative or regulatory issue for policy determinations of how and when to respond. But analytically speaking, the mere fact that you're not seeing singular gigantic events should not put anyone at ease about the problem, because the cumulative effects are very, very significant and deleterious.
And I'm not even sure that it's due to these hostile nation militaries. This is from. I've actually had constituents that have they've been pirated. Their servers have been frozen. We've seen things like this. Mr. Singer, and then you, Mr. Painter. Thank you.
agree completely, and it points again to the value of the resilience node in a strategy where the way to mitigate these attacks is to spread best practices, and second, to help spur on the development of the cyber insurance industry that both backstops these victims but also helps incentivize them to have the best practices that avoid it. Second, it's a great example of how it points to the value of an offensive hit back within the cyber realm wouldn't do anything to solve this problem. This is why you have to have a very diverse strategy.
Yeah, I agree with that. Mr. Painter?
And I'd say three things. One, hardening the targets. This emphasizes by hardening the targets, which is a difficult job, is so important. And our colleagues from DHS who are not here can speak to that especially, but also the private sector. The second is, this is just an evolution of a threat we've seen before. I remember a case when I was a justice where then Mayor Bloomberg, or then, he wasn't mayor then, when Bloomberg had his business, someone hacked into his information. They threatened to expose all of it if he didn't pay them ransom, and he cooperated with the FBI, and they arrested the guy. But so this is the newest iteration of that kind of a threat, and it certainly has very damaging characteristics. But one thing, and again, I defer to my justice colleagues on this, that we did in the fraud cases where you had lots of small frauds, and they end up sometimes being the same actors, is you looked at how you aggregate that. You share intelligence. So you look at the actors and you go after the actors.
Well, and it seems to me, and Mr. Singer, you had made mention of best practices and things. There's just some basic things that could be done. One, report it to the FBI. It might seem insignificant to them, to the business, but it is important in a collective thing. And then the other thing, routine backups, changes, all of that, things that we kind of take for granted. Really, we're looking at a sphere of technology not unlike 100 years ago in the electronic warfare sphere. We were using telegraphs, then we were using wireless, then we had towers and communication, and then satellite, and we saw the maturation of electronic warfare. And I would argue that a lot of our systems that we have in place today with regard to electronic warfare is the same sphere for cyber attack. They use the same power sources, the same type of infrastructure to spread out and branch, even with the digital. I see it very much like that electronic warfare, a war in the shadows. Isn't there a way that we could also do strike back attack in that war on the shadows that's not public? And I leave that with whoever wants to answer that.
And I guess the one comment I would make to that is we've tried to actually do the opposite of that through the release of our most recent strategy and try to normalize activities in cyber so that it is out of the shadows, so there's more transparency around what we're doing and a better understanding both from our allies, the American people, as well as our adversaries as to what our intentions are. I think it's when folks view it as being in the shadows, there's more questions about what the activity, what we're doing to respond to malicious activity. So I think we're trying to normalize operations in the domain and not make it more classified.
I think Mr. Hughes raises an important point about increasing transparency. Clearly, certain intelligence activities, to include covert action, may have their place at certain times and in certain instances, but normalizing and increasing transparency could be greatly helpful. And I offer that what any nation would choose to do sets precedents that are very difficult to prevent other nations from copying in the future. So a question would have to be asked, would you want that to be the rule that all countries obeyed of operating on partial or medium confidence attribution to be taking clandestine action with deleterious effects? That could be a dangerous environment if everyone is not acting with very, very high standards of attribution and preventing collateral damage.
And if I may, very quickly, I think, we can't discuss it in this environment because it's a classified presidential directive, but we can say that there is a presidential directive that deals with this, and it's important for countries to have doctrine around this. So there is that kind of predictability that Sean talked about. And our doctrine does two things. It makes sure that everything is integrated. We're not just thinking about these things separately, but we're integrating all our capabilities and all of the different equities involved. And two, that we're going to favor network security and law enforcement as our first lines of defense and then look at other tools after that.
Yeah, as I close, Mr. Chairman, thank you for your indulgence. You know, I guess there's a part of me and the warrior in me. Do you want to answer a Sony attack with a Stuxnet, or do you want to wish that you had good practices and everybody cooperates? I personally think there has to be a balance of both. If we show ourselves weak, this problem's only going to grow. And thank you, Mr. Chairman. Yield back.
The gentleman from California, Mr. Liu, you're recognized.
Thank you, Mr. Chair. Mr. Hughes, thank you for your public service. I have some questions for you. Earlier this year, Defense Secretary Carter stated that encryption was absolutely critical to the Department of Defense in terms of protecting cybersecurity. Would you agree with that?
Yeah, I mean, Department of Defense systems rely on encryption for our communication out in the field and with our partners, absolutely.
He also stated that he opposed backdoors that would weaken encryption. Do you agree with that as well?
I would support the Secretary's position for the Department.
And I just want to make sure that the Department's view is that we need to move to stronger encryption, not weaker encryption. Is that correct?
I'd support the Secretary's position on encryption.
Thank you. So now I'd like to ask you, in your job, do you deal with telephone networks, communications as part of what you deal with in your role in terms of cybersecurity?
So I think there's collaborations between what my office does for operational oversight, international partnerships, and interagency collaboration of cyber policy, and what the DoD CIO does from oversight from a network security and telephony perspective. My office, per se, does not cover telephony protocols or any of the technical specifics.
Earlier this year, it was revealed that there was a flaw known as a signaling system number 7 flaw in our telephone networks. As I understand it, decades ago, when they set up these networks, and let's say you had to make a call to Africa, you know, the U.S. network would hand off to the European network, then hand off to the African network, and it was assumed that these networks would be trusted. It turns out that some of these networks are owned by foreign adversaries like Russia or Iran, or criminal syndicates related to these foreign adversaries. Have you looked at that issue at all?
I have to take that question for the record. It's not something that my office in particular has looked at.
Who in the DoD would be looking at that issue?
I'd have to take that for the record. I would assume the CIO, DoD CIO would look into that, but I would have to get back to you on that.
If you could, that'd be great. Because as I understand it, if a foreign government exploits this SS7 flaw, which any foreign government that has a telephone network can, it then allows them to listen in on phone conversations of anybody's cell phone, just knowing that cell phone number, track their movements, and get their text messages. It always struck me as odd when we go on these codels abroad, we get all these briefings on, don't take your smartphone, have these protections, make sure, you know, you follow all these cybersecurity hygiene tips when you're in, these foreign countries. When it turns out that these foreign countries can just listen in our phone conversations, knowing our cell phone number right here in the United States. So if we can get some information back on that and whether the problem's been fixed, it'd be helpful. And then I have some questions related to the Obama administration's new cybersecurity workforce strategy that was announced yesterday. One of the proposals is to increase funding and salaries to recruit and retain talented cyber professionals. So I have a question for you, Mr. Hughes, as well as you, Mr. Painter. I'd like to know what is the issue with that? How important is it? And second, what is your sort of view on your ability to retain people once you get them in the cybersecurity field?
So I can speak to the Secretary's Force of the Future initiatives around the Department of Defense. I'm not familiar with the specific program that the administration just released writ large. Specific to Department of Defense, we're always looking at novel ways to bring in more, bring in and recruit and retain more talented professionals across a variety of domains. We understand the acute challenges of retaining our highly trained and skilled personnel that operate on the cyber systems. And so the Secretary's Force of the Future initiative is looking at a variety of different ways to have more permeability between private sector and government service, as well as different ways to bring in folks to serve in different positions, both military and civilian.
And
Thank you.
I would say, yes, this is part of the larger administration attempt to really bolster our cybersecurity. One of the problems we face, not as much in my shop because I'm a policy shop, but certainly throughout the government, is finding qualified people who do cybersecurity. We're competing with the private sector. It's still a fairly small pool. I'd say that there are schools, and we've been working with schools to get programs to have more people dealing with this. I should say that I was a 9-year resident of your district, and I suspect that many of them live in your district, and I do miss it every day. So if you can convince them to come out here, that would be great.
Thank you. Thank you. I yield back.
Mr. Heiss from Georgia is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to begin with you, Mr. Hughes, but if others of you have some input, feel free to jump in here. But what are the factors that define a cyber act of war as opposed to a cyber attack?
So again, as I mentioned in my opening statement, cyber incidents are reviewed on a case-by-case basis. We take into account loss of life, injury to person, destruction of property, and the national security leadership and the president will make a determination if it's a armed attack. But I defer to Mr. Painter for a more thorough response.
And if I would echo that completely. I think that it's an effects-based test, just like it is in the physical world. So we're not using a separate test for the physical.
So at what point do we, what are the rules of engagement that would determine a response, be it a cyber response or kinetic?
Again, not to sound cliche, but again, it'll be on a case-by-case basis. We'll evaluate each incident on its merits and make a determination, again, through a whole-of-government collaboration on what the response might be.
So who makes that decision? Is it the president alone, or are there multiple agencies or representatives from agencies that would be involved?
The national security leadership, in conjunction with the president, make that determination.
But I would say that as we look at these, there's a range of different activities, and you use the term cyber warfare. But the question often is, what constitutes an armed attack under international law that would then give a right to self-defense? But even if it's below that threshold, we still have a number of ways to respond. It could be kinetic, it could be through cyber means, it could be through economic means and sanctions, it could be through diplomacy, it could be through indictments and law enforcement actions. And what we've done, and this is one of the things, having tracked this for so long, I've seen is a real change, and a really beneficial change, is there is a very, very strong interagency process that as we're looking at these threats, I mean, Aaron and I in particular, we talk all the time, but all the different interagency colleagues do talk about these threats, talk about possible responses. In the end, it's up to the national security staff and the president, but we look at all these different opportunities. If it's a criminal matter, justice will take it, for instance. So we'll look at our tools.
I'm concerned with the lack of clarity on this and the bureaucratic, multi-layered involvement to make a decision. And now we have Cyber Command in Fort Gordon. If Cybercom were elevated to a full combatant command, would that help?
I think we're always looking at ways to make the military establishment more efficient and effective. I wouldn't say that elevation of Cyber Command in and of itself would help in a determination of cyber incident being an armed attack versus other types of malicious activity.
Mr. Singer?
To weigh in from outside of government, essentially in defining whether it's a war or not, many of the same measures would be used, whatever the means, cyber or physical, to put it bluntly, is throughout history, it's decided by, does it combine a political intent and mass violence of some kind, physical violence, death, injury. So as an example, there are cyber attacks that steal secrets. They are incredibly vexing, but no nation has ever gone to war over just their secrets being stolen. But that judgment, I'm sorry, the judgment, though, is a political judgment on when it's an act of war. And my hope is, and this is the value of this hearing, that it's not just the president or the NSC, but it's also Congress traditionally has decided when the U.S. is at war or not.
Well, yes, to some extent. But let's go down that path a little bit further then. Can a member of NATO invoke Article 5 for a cyber attack?
Yes, they can. In fact, there's been a lot of activity in NATO since 2012. Cyber is part of NATO's operating construct. We just had a leaders-level meeting for NATO where they agreed, among other things, they previously agreed international law applies, including the law of armed conflict. They are doing cyber strategies that Aaron can talk more to. But one of the things that was agreed to back in, I think it was 2014, is that cyber could qualify under Article 5. And that
Okay, well then let me ask this. Does NATO have a definition of what constitutes a cyber attack? Saying that we don't.
First, I think it's not true that we don't have a definition. We just talked about what would qualify and the factors you would use. I would have to go back and look at NATO's doctrine, but I think they have a lot of focus on this. They understand the risks out there, and they're building their capability.
All right, well, our definition was not clearly communicated to me. It was going to be left up to the President and others based on certain factors, and somewhere they're going to make a decision. But I see my time has expired. Mr. Chairman, I thank you for your indulgence. I yield back.
The gentleman from Iowa, Mr. Blum, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Appreciate it. And thank you to our witnesses today for providing us some insights into this growing problem of cyber security. I come from the private sector. I've been operating in the private sector my entire career. So I'd like to chat a little bit about China and the United States private sector. And while most of my questions would be toward Mr. Painter from the State Department, anyone else feel free to jump in. Mr. Painter, the State Department's Overseas Security Advisory Council, OSAC, recently concluded that despite media's reporting that Chinese cyber attacks are decreasing, cases of Chinese espionage campaigns against the U.S. private sector are ongoing. Which sectors, Mr. Painter, do you think are most at risk for these Chinese cyber attacks?
Look, I think the DNI has talked about this, and we continue to see intrusions into systems, both government systems and private sector systems, for espionage purposes. What we agreed to with China, which was significant, is that they would not break into private sector systems to steal intellectual property or trade secrets or business proprietary information for the purposes of benefiting their commercial sector. On that, we've been pushing them very hard. There's a number of ways we've been doing that. It was really a remarkable fact that they came to that agreement when President Xi was here, and we said we're going to hold them accountable. We're still going to use all the tools that we have, and the jury is still out. I think Admiral Rogers recently testified saying we are watching closely, but the jury is still out.
Any other comments on that question?
Again, I left government on May 9th of this year, but up until that point, I would concur with what Chris has just said. Having been the office that was charged with making those determinations on behalf of the U.S. government, the jury is still out, or it was as of May 9th. And I will just offer two other considerations that one has to think about is, and I mentioned this in my written statement, modus operandi may change, so behavioral patterns may change, and the question of volume or quantity versus rate of success and quality of foreign activities is something that needs to be considered. So I would recommend that if that is an issue that is of interest to you, sir, that's probably better for closed hearings with my colleagues or others from the intelligence agencies in the future, but asking what the current impacts are and what, if anything, has changed and metrics, that kind of attribution analysis is very, very difficult, and you quickly get into classified discussions. But it's a worthwhile question and one we grappled with for my 5 years at ODNI.
Mr. Singer.
If I understood your question, it was, in essence, who's being targeted, and it's a confluence of two factors. It's, one, what are their national priorities for economic success? To put another way, what industries do they want to be global leaders? And those are industries that have been most targeted for intellectual property theft in the past. The agreement may change that. And the second is vulnerabilities. Where are the weak links and who are they able to get into? And that again points to the value of a resilience-based strategy where it's effective, be it against the threat of intellectual property theft to the threat from cyber terrorists to China in a military means. Good defense actually is good defense.
Well, Mr. Painter?
And I would certainly agree with the hardening the target issue, which we've raised a number of times. But I also say it's not just the U.S. So one of the important things is a lot of other countries have raised this concern. The U.K. has raised it, Germany has raised it, and others. And the G20 statement that I talked about, where there was an affirmation among the leaders of the G20 that this conduct was impermissible, I think is also important. It sets a metric that we can hold people accountable by.
Relative to China, and since we're talking about cyber attacks in the private sector, one would think the reason for China doing this would be economic. But is there any military reason China would be attacking our private sector? Maybe Mr. Hughes would have some insights into this. Or what are your thoughts? Are these attacks, cyber attacks, mainly private sector economic, or are they also military?
I think they're probably targeting our private sector companies to enhance their national security apparatus as well. I'm sure that some of our defense industrial-based companies are being targeted by the Chinese to benefit their military development and advancement of their technologies.
Mr. Painter, any other insights on that?
No, I would agree. I would think that you'll see, just as the DNI said, a full spectrum of targets given the information that's out there.
Have, in fact, China's cyber attacks, the amount of them decreased over the last 5 years? Is that a fact?
I would defer to that question to the closed hearing and to the intelligence community.
I would agree with that. I think that would be a ripe subject for the closed hearing. What I can say is, in terms of the theft of intellectual property for commercial purposes, as Admiral Rogers said, the jury is still out on that, and I believe the DNI said that too. But with respect to any more detail, we can get that into another setting.
Mr. Singer?
As to the question on the goal of intellectual property theft not just being economic, it definitely has a national security side, and the easy answer to you would be Google images of F-35 and J-31, and you will see a remarkable similarity between our most expensive weapons project and their new jet fighter system. And they either it's coincidentally they look alike or there's something else going on.
What can Congress do to provide additional deterrence to countries like China, as far as maybe criminal law, for example? What more can we do? What are your suggestions? And I'm thinking of China specifically here, but it applies to all nations, obviously. Here's your chance. Here's your chance. Tell us what to do.
I would offer that this is really an issue of strategic reality, incentives, disincentives, and consequences. We've talked about attribution, public attribution, and that there may be no bite behind a bark. I would offer you have to look at very complex bilateral relationships, certainly if you're talking about the United States and China, but also with other countries, and ask what would strategically incentivize or decentivize changes in behavior. Having served 16 years in the intelligence community, for me it was about what was actually happening, not what was being said. And again, to get into the very particulars of that, about volumes of activity or impact of activity, that is again something I would say that the current serving members of the intelligence community and other executive agencies would be better off discussing in a closed session.
I would just add that the fact that in this case, the President and at the highest levels of our government, obviously the President raising this with the President of China as not just an issue of cyber versus cyber, but an issue that affected the overall relationship had a big impact.
And if I have time for one more question, Mr. Chairman, I'd just like to ask the panel, has there been any noticeable effect following the Department of Justice 2014 indictment of the PLA officers? Has there been any noticeable effect?
From my observation, that became a strong topic of discussion between U.S. government and Chinese government officials, and I defer to my colleagues who are still in government regarding that. And there were also negative ramifications for certain U.S. companies who had business opportunities in China very quickly curtailed. So it had an economic and business impact on U.S. entities, and it also certainly was a central part of the discussions, of the policy discussions, which are better answered by the policy departments.
Mr. Painter?
And part I defer to my colleagues who are not here from the Department of Justice, but I'd say that, yes, a dialogue we had with the Chinese about de-escalation and norms in cyberspace was suspended. We have now gotten back on another foot on that. which seemed an odd reaction to that. But nevertheless, I think it showed that we were serious, certainly, and that when that combined with the president raising it and the threat of sanctions and other things, I think likely brought the Chinese to the table, but that was more an assessment for others.
Any insights on that, Mr. Hughes?
Again, I would also defer to the intel community for classified assessment and then Department of Justice.
I have no further questions, Mr. Chairman. I yield back the time I do not have.
I recognize myself for 5 minutes. Once again, gentlemen, thank you all for being here. Thank you for your patience. You guys all are very influential in keeping us safe, and I appreciate that, and sorry to keep you away from your day jobs too long. This is a funny topic for me to be the chairman of, considering I spent most of my adult life in the clandestine world, right? But having everyone that has a role in this side by side, there's value to this, and I've taken a lot away from these conversations. So I really appreciate that, and I have some basic questions. And my first question is to everybody, and I don't ask this as a yes or no question. It's a really basic question. I'd welcome a little detail, and I'll start with you, Mr. Hughes. Do the bad guys know what we can do?
I think similar to the U.S. national security infrastructure, having intelligence agencies, our adversaries are also doing collection against us. In some instances, they're likely tracking our TTPs, so I would assert that they have some idea of our ability to exploit networks and get information. Absolutely.
Mr. Painter?
Yeah, I think also there's a benefit in the bad guys knowing what we can do to some extent. I mean, we certainly, in, for instance, the criminal law context, want to project that there'll be consequences for people's actions. So we want that we have economic tools we can use. We have other tools we can use. That's part of the deterrence message, is the bad guys knowing, whoever the bad guys might be, what you can do. And in that, I think what I've seen personally is that, we have made real progress in communicating that. One of the questions was asked earlier about the Bangladeshi situation. Part of this is outside the U.S., which is part of my gig, which is working with other countries around the world so they have these capabilities too, especially.
And Mr. Canuck, before you get to that question, I'm going to ask you, Mr. Painter, to pick up on something you just said. Ukraine, Romania, Latvia, where are those countries where the legal framework is not there to allow the right kinds of prosecution? Because when it's not, we know how many attacks are coming from these different countries because there's not a legal framework in which for they to get prosecutors sued. Where are those places of biggest concern to you? What additional pressures should we be putting on these countries in order to establish that kind of framework?
So the countries, I think we've made a lot of progress, and especially my Department of Justice colleagues, and one of the things that we do is capacity building. So we work with DHS and DOJ. We've done things in Africa, a lot of regional trainings in Africa. We've worked with the EU and others. We want every country to have strong cybercrime. You can remember the I Love You virus, where the Philippines didn't have a law that punished this, and now they do. In fact, they've gone through several iterations of that. So, I don't think it's helpful to signal out countries and saying you're doing a bad job. I think it's more helpful to help us get in there and work with them, because they also recognize the economic value of this. If they have good cybercrime laws, people want to invest in their economy. They want to, you're going to promote innovation. So I think the Budapest Convention, which is a convention, the Budapest Cybercrime Convention, the one that we promote around the world, there's been a number of new signatories recently. We're working on getting more in Africa and Asia. Japan joined about a year and a half ago. So that's part of the push. Now, there are other countries, and this goes to more of the policy issue, like Russia and China, who want a global, a UN convention, and we think that's just wasting time. We need to really, this is an urgent issue now, and countries need to be prepared for it.
Mr. Canuck, not only do the bad guys know what we can do, is there stuff that we should ensure the bad guys know that we can do? And the third piece is, I think the difficulty for a lot of us up here is when you talk, what is a digital act of war, the difference between a digital act of war and a gray area and a red line, what does all that mean? And we've had conversation about what is off limits. And I think sometimes part of the public conversation can articulate in a more granular level what is off limits, right? And so, and Mr. Singer, you made a great point about the Ukrainian grid attack. You know, if you look at, what is it, the UN's, you know, Chapter 7, Article 39, 41, 42, and 51 that talk about those things and where you can, you know, defend yourself. The grid is pretty clearly articulated there. What are some of those other gray areas that we should be exposing? I know there's a lot of questions in there, but you know, you're a smart guy, Mr. Canuck. You can follow them all.
I'll do my best succinctly to hit the three. Starting the one that my colleagues have answered, I think our sophisticated adversaries fully understand the laws of physics, the nature of telecommunications equipment, how electromagnetic spectrum operates, and how software logic code does. They may not know exactly what accesses, or we may not know exactly what accesses any foreign government may have on any given day, or what hardware or software implants may exist. I would liken it to a poker game where everyone knows the cards in the deck. You don't know who's holding which cards in which hand, and those capabilities may be fleeting and in flux at any given time. Secondly, is there a benefit to letting anyone know what we can do in certain instances? Again, while I appreciate clandestine intelligence activities as a 16-year intelligence professional, there may also be reasons in certain cases to declare or show certain capabilities, akin to having a standing Navy or other armaments that are known for a credible deterrent effect. However, the nature of cyber tools differs in that if you reveal the particularities of a capability, an adversary may be able to develop countermeasures. So there'd be a very sensitive balance there, certainly at least against your most sophisticated adversaries. Regarding gray areas and red lines, I'd actually like to draw attention to two important points which are on the margins of some of the discussion we've heard today. A lot of discussion is focused on act of war. I actually think that's the wrong focus, as I stated in my written statement. Most of what we have seen foreign state actors doing has been intentionally designed to operate below the threshold that would trigger Articles 2.4, Article 51 of the UN Charter, or Articles 4.5 of the Washington Treaty. There is a cognizance by many actors to use cyber technologies in an asymmetric coercive tool for influence with the expressed interest of avoiding military conflict. So that is actually how these weapons and tools are being most utilized.
So, Mr. Canuck, on that, should we be lowering the bar?
Again, that's a policy decision. I think, for starters, we need to be cognizant of these low to moderate level activities and their cumulative effect, like we were discussing earlier with one of your colleagues. Where you actually draw red lines, that is a policy question. I think there are certain casualty levels and certain property damage levels that under an effects-based analysis would constitute an armed attack or an act of war. But that analysis, as has been stated earlier by the executive branch representatives here, is the same that you would use for non-cyber modalities. The last thing I'd like to, if I just may mention, focus is we need to pay more attention to what will be a problem more and more in the future of attacks on the integrity of data, not on its confidentiality and not on its availability. Director Clapper has made reference to that in his last two worldwide threat assessments, and I fear if ransomware is today's news, the future news is going to be integrity, value of information, not access to it.
Turning 10,000 into 1,000 or changing
what's seen on a air traffic controller's screen, changing information in the Twittersphere that will affect investors' actions, changing what the situational awareness that a military commander is seeing. Can you trust the information you're seeing to make actions upon it? That is actually the value of information, and that is what, unfortunately, this conflict space will turn to in the future more and more.
Great. And Mr. Singer, I'm going to add a question to you as well. And we talked about effects-based approach, and does an effects-based approach include intended effects or only the actual effects? Can we determine intended effects? Should we be trying to determine intended effects? And should our response be based on the interpretation of what we may think those intended effects are?
I'll hit that question first, because that's where I do believe the idea that we solely use an effects-based judgment is just not, it's not the way we actually approach it. So to use a non-cyber example, a bullet crosses the border into your district and kills someone. Effect. But we will judge whether we are at war or it is an act of war from Mexico as to whether is it fired by Mexican government with intent to kill, or is it an accidental discharge, be it by a Mexican government individual, then we would ask the same question if it was a civilian or not. Intent does matter. It's one of the things that will be, at least in a political judgment, the kind of political judgment that would be made in the White House to deliberations in Congress, if it's going to make a declaration of war, it will judge intent as much as effect. The challenge is kind of figuring out the intent sometimes is going to be unclear.
Well, over the last couple of weeks, we've learned a whole lot about intent.
Yeah.
So,
yeah. But the second thing to hit your question about awareness, my belief is that the bad guys have no doubt of our offensive cyber capability. If they had any confusion about it, we had a series of policymaker leaks about the Stuxnet operation, and then we had a massive dump from Edward Snowden, which caused us a lot of problems, but it also showed off we are quite good in this realm. Right. The challenge is, if you look at the data, there is no evidence that that raised awareness of our offensive capability actually deterred attacks. Overall, data loss to America in general, citizens, went up 55% the year after the Snowden leak. To many of the cases that we've talked about today, whether it's OPM, to ones we haven't talked about, the attacks on the Joint Chiefs email system, those all happened afterwards. But that's not to say that deterrence isn't working. So, for example, there's lots of things that a China, a Russia, an Iran could do in this realm. They don't, in large part not merely because of our offensive cyber capability to hit back, but because we can hit back in other realms.
Well, I'd like to thank the ranking member for indulging me in going over, and I'm going to ask this last question to all of y'all, and this is good. I recognize the difficulty in the question that I'm asking. It's probably not as difficult for Mr. Singer to ask, and Mr. Canuck has not been out of government long enough to be able to answer this question easily. Y'all are involved in policy, y'all are involved in operational activity, but I'm going to ask you, what is the best next action for this House, for Congress, on this topic, to move the conversation to where, you know, we are having a whole of government response, or improving a whole of government response? You know, not the end goal, right? What's the next step? What would y'all like to see this legislative body do? And you don't need to take forever. We've already run out of time, but Mr. Singer, I think it's going to be easiest for you to answer this question. So let's start you and go in reverse order. And Mr. Hughes, you get to get the last word.
I'll just hit again the written testimony points, particularly about how do we build up our resilience. And there's a series of things that Congress could do, and some of them are quite as simple as, for example, holding a hearing on the cybersecurity insurance industry and how could we bolster it, to there's actual small step mechanisms that could help it go on, to the examples of are there organizations that could be created and the like. But maybe to sum it up, the question for the Congress is, we know there's a series of best practices out there in private sector and government. How do you help aid their spread, and or where the executive branch has made a commitment to implement them, how do you hold their feet to the fire to ensure that they're actually doing it, particularly across another administration.
And we got the bipartisanship part down, you know, in your testimony. I think this is one of the things that has been great about this committee. Mr. Canuck?
It's been mentioned by a couple of my colleagues already, but I want to fully add my support to the discussion about resilience, and as one aspect of that, the growing insurance market in this space. When we did our analytic exchanges and outreaches, we quickly learned from my old office that resiliency was a necessary component for policy options. If you are not safe, you will be restricted in what you can be doing offensively, defensively, and otherwise. I'd also like to add, if we're talking from a legislative perspective, I do believe that Congress can have an impact on the federal workforce. And as a couple of my concluding statements in my written statement said, this is a qualitative, not a quantitative game. Cyber expertise is about having the highest level of competence. The greatest breakthroughs in information technology have not been because there were 1,000 people in the room. The greatest breakthroughs in encryption, in hardware and software have been by small entities. We need to ensure that some of those cyber Olympians are working in the federal workforce and stay there.
Amen.
My last comment will be, it's wrong to think about this as cybersecurity. There is no solution for perfect cybersecurity if you are up against determined, well-resourced adversaries. This is about risk management and risk mediation. The future discussions would be most served for the public good if they were about a cyber risk discussion, or even better, information risk to include integrity concerns. Shifting that intellectual framework to information risk will help you a long way towards addressing some of the issues that this panel has raised today.
Thank you.
Thank you.
Mr. Painter.
So I think the number one thing, and given my experience, is to maintain the momentum and the focus on this issue and the education on this issue. Look, you know, even 5 or 6 years ago, and at the end of the Bush administration, there was a comprehensive national cyber initiative. Back in 2003, we had a cybersecurity strategy that became shelfware because people at the time weren't ready to deal with it. I think now we're in a different place, but I think it needs to be made a priority and continue to be a priority, not just for this administration, but whoever the next administration is. Now, I think we're in a good shape there because I think now, because there are hearings like this and your Senate colleagues in SFRC, I've testified before them, we've done a report to Congress about all of our activities across the board in cyber, including throughout the different range. I think that's all important. But the focus really needs to continue on this and be seen as a priority. 5 years ago, when my office was created at the State Department, there was no real cyber diplomacy program. We now have 22, I think, countries around the world that have counterparts to me that didn't exist, where we can actually not just have dialogues about policy, but when we have an attack like the denial of service attacks against our financial institutions, I can reach out to counterparts and I can say, look, this is important. This is not just the normal technical issue. So that's important. What I'd say we don't need, you know, for my department, because we really cross-cut among all the different parts of our department, is, you know, I know there's some proposed legislation to kind of stovepipe this issue and put it into one particular chain and create you know, more bureaucracy, in my opinion. I'd say that's not helpful to us. What we really need is to be able to mainstream this throughout the department and really throughout our foreign policy.
Mr. Hughes, you get the last words, so no pressure.
Well, first and foremost, as my panelists have said, continue the dialogue. I think awareness across the United States and the American people of cyber threats and vulnerabilities is important. The adversaries aren't using sophisticated tactics to steal data. They're using the low-hanging fruit, and there's such a lack of basic hygiene that they don't need to resort to nation-state level capabilities to steal information. So continuing the dialogue and awareness is important, because the interdependencies between government networks, private sector networks, foreign entities, I mean, we're all so intertwined that a vulnerability in one can lead to a vulnerability for all. And then tactically, I would second again what Mr. Canuck said in terms of workforce improvements, workforce management. I know the most recent NDAA provided the Department of Defense a little bit more flexibility with the cyber accepted service provisions, and we plan to take advantage of that to improve our ability to hire and retain talented cyber professionals.
Excellent.
Well, add that also I wanted to thank Congress for the recent cyber information sharing legislation. That has helped. So.
You're welcome. Without objection, I'd like to enter my full opening remarks for the record. So ordered. And I'd like to thank our witnesses today for taking the time to appear before us. It's a very important conversation that needs to continue. And if there's no further business, without objection, the subcommittees stand adjourned.